We can go live, and then I can fix all the things I need to fix. I was just lying down, dude. I'm like a massive headache. We're live, by the way.
We are live. Hey guys, good to be here with you. We got a couple of earnings to break down, not in like great detail, but we want to at least talk about them a little bit. There'll be breakdowns a little bit later, of course, for Sofi on FinTech Friday. I think probably all of us will cover Sofi earnings separately too in another video. And also PayPal had earnings this morning too, and had quite the journey as far as the stock price. Some interesting announcements from PayPal, 4 actually partnerships between yesterday and today. Massive news from Nvidia and Palantir and a number of names too. Some really interesting reads on the climate as far as UPS and Amazon with layoffs, and we have a little bit more Amazon stuff as well. Plus, whatever Tevis wants to talk about beyond that. But as always, guys, we have our list of topics which we'll go through. As you have questions, put them in the comments. We would love to hear those. And we'll have a session towards the end of question and answer, rapid fire. We'll try to get to most, if not all, of your questions at the end. Tevis, how are you?
I am doing good. I'm just going to go grab a drink in just a second, but I'm doing good. Man, it's been a crazy day. Like, I feel like I've been up for so long. Like, and it's like, I don't know. I don't wake up at 6 a.m., dude. I work in tech. I roll into the office at like 10:30. So this is like one of those TikToks where they're like, I wake up at 3 a.m., I run a marathon, I come back, I make 100K. And then by the time I am done, you wake up. I feel like that today. You're echoing, by the way, so I don't know if you have the right mic on.
Let me check again. No, I do not.
Yeah. People are already asking questions, which is good. So we're going to cover questions at the very end. Matt, if you want to hop on, let me know and I can send you an invite, sir. You're always welcome.
Is this better?
No, I can still hear myself.
Okay, I'll be back.
Great. I definitely did not, Jesse. That would be nice, though, if I made that in one trading day. So if I started the day down and then finished the day up, and it's going to take me a little bit to recover. I was just like almost falling asleep before my alarm rang for this. All right, and he's back.
Okay, test.
I think it sounds better. Yeah.
Okay,
you're good.
Hopefully.
What is BMNR doing? We will answer this along with all of your other questions. Made a few bucks off PayPal today. Thanks, Roy. Where's the Halloween costumes? Yeah, maybe soon.
Is it Halloween today? Because I don't think it's Halloween today.
It's Halloween somewhere, probably.
By the way, FinTech Friday will actually be on Saturday this week because of Halloween, so we will not be wearing our costumes. My costume is this, although I do something really fun, Tevis. Once I don't do you guys? I'm assuming trick or treating is pretty much the same in Canada, where you give out candy at doors. And are you participating
neighboring
in that,
countries? It's not like a random like Easter. Like we're neighboring countries, bro. We have the same customs. It's the exact same traditions. We just have. We're like a village. Like think, what would people in like Arkansas or like Mississippi do? Like that's pretty much the level of stuff that we have.
Okay, that's a high bar there, but no, not really. Yeah, so I've been giving out. I have a big sack of candy. Probably will get another one too, and then I'll give out potatoes too. And this is a meme online from like 10 years ago, and I just embraced it. And so I'll give kids a choice when they come to the door. Say, okay, 3 pieces of candy or a potato. And there's a lot of like potato history and stuff that I love, and I love gardening and that sort of thing. So, but it's a surprising the amount of kids that actually choose potatoes and know it's not to throw them at anybody else. So. Yeah, that's what I'll be doing on Halloween is giving out potatoes and or candy. Yeah.
Wow, that is so tragic. I am glad I didn't grow up in your neighborhood.
You get candy or potato. Like you got a choice. There's nothing wrong with the choice. And that, Tevis, is a tie-in to the earnings. It seems like we had one of the earnings, 2 earnings that we're looking at today, which was a lovely candy, and the other one which looked like candy and ended up being a bit of a potato. Can you guess which is which?
Yeah, exactly. Give them a share of PayPal.
Yeah. Yeah, and like, I think anybody that actually looked at PayPal, I see some people that bought, some people saying PayPal was amazing. They made some money today. Somebody said, I understand your pain, pal. And what do you make of PayPal? Sigig said it at 6:02. What do you make of PayPal starting so high and dropping quite seriously throughout the day? So let's, with your permission, Tevis, let's start with the potato of the earnings, which I love potatoes. Potatoes are solid. They're very good. They're not candy. So you good with starting there?
I am great with starting there. I'm going to go grab a little drink so I can wake up and actually pay attention.
Okay. And let me share my screen here, just in case this comes in handy. So since Tevis is gone, now I can spill the beans where he's actually kind of interested in PayPal at this point. So these were kind of earnings very similar to what I was thinking. Now, my numbers were not completely in line. I was expecting a little bit more or a little bit less. I think I had revenue, a little bit more as far as active users. But by and large, pretty much everything added up to where I was expecting. So this wasn't, I think, what popped the market, to answer Sigig's question. There's 4 partnerships. I'll probably have 2 separate PayPal videos later this week, one breaking down those partnerships, and there's some really interesting nuggets there. The other probably just doing an earnings review, but you guys get the beans early. So in essence, very good solid quarter, but the reason why it popped was because of the OpenAI partnership. This was one where people told me that it was just bears. They always have these silly arguments with PayPal, which they're absolutely right on the stock. They're wrong on the company. One of those they'll have to give at some point. And we saw the stock give a little bit, at least today. But they're like, oh, these guys no longer innovate. They're no longer doing anything for the future. They're just dead in the water. But they've announced OpenAI contract, Google contract, MasterCard contract, and Brex contract as well, which are all really solid and good. MasterCard was like, it was okay. But all in 2 days and really good earnings as well. I think the OpenAI partnership, because we can see this effect on other companies as well, was the big increase. We can see the timing of it too before earnings came out. I figured that they came out. I wasn't finding the numbers, saw that. It's a pretty exciting partnership. And the neat thing about what PayPal has been able to build, agentic commerce is like several years out, honestly, from like meaningful volume. We're in the early innings, but they've partnered with pretty much everybody under the sun. There's still more that they'll partner with too, and across multiple protocols. So I'm not going to bore you guys with like model context protocol and AP2 and all that stuff, but they've covered all their bases there. And the nice thing is basically no matter who wins, PayPal will be very much in the mix, some more so than others, but yeah, PayPal is not going away. So the market should have loved, and it did love, the OpenAI moment too, because also merchants are able to sell, PayPal merchants, on OpenAI directly. And this is like a major pain point. Alex Chris did a good job of illustrating and talking about this in the past, but also at this earnings, where he said, large businesses, no problem. Like Walmart, they were going to figure out agentic commerce, but the mom and pop shops or the little guys, on Etsy and Shopify, they need help, and they'll get that from some of those platforms, but also from PayPal as well, to be able to bridge this next gap in the future. So as far as the actual earnings itself, triple beat yet again, same as quarter 2. And that's kind of why I was not expecting too much out of this quarter as far as a price movement, because we saw something similar. I was like, hey, quarter 3 is going to be pretty close. And really good solid earnings. Again, a triple beat, but it's not enough to get the market excited. And there's 2 reasons why. One is, let's see, we need to get to the growth. So actually, one thing to remind folks, we're still in this churn right here for Braintree. And so the PSP processing, this is the Braintree of the white label processing. When people say they never use PayPal, they actually do. They just don't realize it. But we are still in this mix here. So we're in quarter 3 where we've seen some acceleration here, but like the real reacceleration, I think it's 2% last quarter, now 6%. We're looking at double-digit acceleration here as well. And then into next year, they talked about this as well. So as far as the main thing that I think analysts are looking at, and some came out afterwards and reiterated the buy rating and stuff, and others are like, nope, PayPal is garbage and it's stupid. It's this right here. This is one of two issues with the quarter. Branded checkout, which is not technically their highest value as far as their take rate. That's cross-border, which usually is branded, but also buy now, pay later, which is a 5% take rate. This is not growing at the speed of e-commerce. Alex addressed it directly in the comments, and they said, "Hey, this we're not happy with. It's not good enough." They gave some reasons why it's there. A lot of it is related to, right here, macro. Didn't help that they had that German issue. Didn't help that there was tariff issues. And the U.S.-China corridor is massive. PayPal is very much involved in there. If that gets resolved, it's really good for PayPal. And even if not, they're solid. This will accelerate and begin to accelerate really in quarter 4. They didn't guide for that, but like with what they've actually launched as far as products, that's going to accelerate. So we're probably going to see 6 to 7%. Not quite good enough. You want to see it at about 8%. So just keeping up in track with e-commerce trends globally, or at least here in the United States. The other is the top line revenue. So top line revenue, we look at here, solid, 7%, but it's with an asterisk because it's actually dollar neutral. The dollar is actually weak against the basket of currencies. And so they actually benefited. It's like the first time in a long, long time that's been the case. But this isn't double digits yet. With what they're shipping out in quarter 4, they're not guiding for this. I don't think they're going to get double digits, but they might. If macro, it would take a couple of things. Macro still has to be solid and good. They talked about, and this is why I think one of the reasons why once the earnings call started, just like with Sofi, where they have like just the most cautious guidance ever. And if you listen to them on the macro, it sounds all gloom and doom. That's the CFO. She must have worked for Sofi in a past life or something like that, because it could be the best economy and everything, and she will make things sound terrible. She's great at what she does. She's just terrible at that sort of communication. And so she mentioned like, hey, we're seeing amounts or volume increasing, but the actual size of the order decreasing across the board into October. And it's not because PayPal is terrible. It's just they're seeing consumer weakness. And so at that point, they're like, whoa, maybe we gave PayPal too much credit. But that's when they guide, they're like guiding for kind of like SoFi of like, we're guiding for a recession and very few rate cuts and like no help for the macro. Here, they're guiding for no change in tariffs. The de minimis stuff is completely gone. That consumers will be stressed into not earnings, but into the holiday spending season, and that nothing good will happen at all, period. That's how they got. So anyway, that's the main issue. Is guidance, they increased it. Again, it was triple beat. Top line revenue needs to accelerate up to double digits. Probably a quarter 1, quarter 2 thing next year. And that branded, I think, is the big thing that analysts look at. Branded experiences, that's doing well. That's where it should be, but branded really needs to tick up. So there's a lot of other stuff here that I'm not really going to go through unless we have questions in the comments, or, Tevis, if you have questions as well. But so good solid quarter, roughly what I was expecting. A little bit nicer price action than I was expecting. I was thinking flat to down just because we saw it last quarter when they had a triple beat as well. But I think the OpenAI thing helped. And then I think today, we probably saw some people that just said, you know what? I've been in this stupid play for too long. It's popped up to $80. I'm out. And, there's always going to be some of that too. So, but I think there's a lot of people that looked at PayPal and looked at all the things that they were releasing. And I don't know, there's some that are new buyers here today we see, but I think that there's also a lot of people that are, and the dividend. I forgot to mention that.
Big part. So hold on. Let's answer this, and we can talk about the dividend as a whole.
Yes. No, I don't think so. So it would have been an issue. I don't think they should have done a dividend. If they did, like, they should have done a joke of a dividend like Nvidia. This was more than a joke. They said basically 10% of their EPS is going to be a quarterly dividend. And
Roy, the dividend yield, like, what would that come out to?
I didn't have time to calculate.
Under 1%?
So it's 14 cents is what they're issuing in December. And yeah. So they're doing basically 70 to 80% of the free cash flow, which is interesting, by the way. It used to be 80%, which is pretty telling of where their free cash flow is going. Oh, Yes, and I need to pull this up too because the free cash flow is really cool too. That was an important piece, and that may be one of the reasons why it initially ran up, because for some reason people thought maybe they were lying about their free cash flow, which was the stupidest thing ever because they're very conservative. Well, anyway, so they announced a dividend, and it was a surprise to me. I think it's a surprise to everybody. It's going to bring in a new set of buyers, even if it's not a massive yield. Some people will not touch stocks unless they actually give a dividend. Free cash flow is lumpy over each quarter. Let me remove operating. And this, by the way, is actual free cash flow, not adjusted free cash flow. There's some timing impact just as it relates to Blue Owl Capital, and a partner of Sofi's as well, by the way, who is buying some of the buy now, pay later loans. And so the timing of that basically makes this a little bit less than it would. Still, like, that's a great number. They've guided for 6 to 7 billion this year. You can see where they're at right here. That's going to be a lot in quarter four, a whole lot. Part of that is that one-time benefit going the other way in quarter four. But yeah, the dividend thing, if they had, if there was issues with their free cash flow and they're like, hey, we're not actually going to hit this, all of a sudden it's like, okay, well, how are they going to fund their buyback, and how are they also going to fund their dividend? That's not an issue at all. In fact, free cash flow continues to accelerate. It's going to accelerate a lot next year as well, so they can afford to do both. The other issue would be is if they said, hey, we're going to slow down our buyback program. They didn't say that. They're continuing to do $1.5 billion in spend towards buybacks each and every quarter. And they have like $15 billion left allocated towards it, which is, a fourth of their market cap. It just, well, a little bit less than a fourth now, but it's close. So yeah, I don't think that really impacted anything. Really what it showed is we have plenty of money. They have more cash than debt, by the way. So they're not in a Fair Isaac, ticker symbol FI, which is basically, if I'm not mistaken, I think it's them. It might be Fiserv. One of the two is like doing massive buybacks, but just getting a whole bunch of debt to be able to fund those buybacks. That's not what PayPal is doing here with this or the dividend. Both are very sustainable. I wish they had waited, for like maybe triple digits or above, just to show like it's really coming from strength. It is, but not from the stock price.
Right. You just remind me of another piece of news that I'd like us to talk about.
Can you put up the J-Man 5520's comment at 617?
Yeah, I also have a bunch of questions, but go ahead, J-Man.
Yeah. So the dividend is pretty great to me, mainly because it opens PayPal up to new buyers and ETFs, but also because it now gives them an off-ramp with buybacks as the price increases. I think that was always the plan. They talked about returning shareholder value in other ways, just a little bit earlier than I expected, but there will be some new buyers at ETFs that did not buy it at all. So I think they could have had the same result if they did a much smaller dividend, but they can afford it either way. It's fine.
Yeah. Look, I think I say this tongue in cheek. They're growing like a dividend company, so they might as well offer a freaking dividend.
EPS is growing, mid double digits, and it's going to start growing like 20, probably close to 20% next year. And some of that's buybacks, but there's a lot of growth that's happening that's not on the top line. So,
yeah, you know what? We've been talking about this. Is kind of topical because Roy had another power outage, I think. Great. Man. Guys, what is it living in Texas? You guys hype this place up to be all this amazingness, and we've had 2 power outages, both coincidentally on Tuesday streams. Is it just the Bootleg Weekly is too much for Roy's system to handle? Like, I don't understand what goes on here. So we'll see if Roy can connect from his Tesla or something, or if the grid comes back online. Yeah, he's typing to me on X right now. So let's just put him down and save him the misery there, and I'll take the full screen. Yeah, Elon is shooting rockets. It takes up the whole grid. Now I can talk about Nebius. Yeah, hopefully he comes back relatively soon. I was enjoying this PayPal conversation because I didn't do any DD on PayPal today. I just went from the Sofi stream to being in meetings all day long, and then now I'm on this stream right as I was done with my actual work. Yeah, exactly. Needs to sell some PayPal to he said, I almost said big storm. He said, I almost said big storm's happening and I hope I didn't lose power. It's back on my computer. And he's just booting up right now. So he should be back in momentarily. Josh, if he sells PayPal, that won't pay the lighting bill, bro. Unless he sold this morning, it's definitely not paying the lighting bill. If he sells some Sofi, then that might pay the lighting bill. But Texas is a deregulated state. Don't spend money for maintenance of the system until it breaks. So, yeah. Consider some DD on Zeta. I looked into them months ago when they were at $14, and I haven't really looked at them again. Am I muted? If that's the case, then this stream has gone off the rails real quick. Deciding how to manage my Nvidia covered call. Yeah, I saw it was like 198 or something. It's going to break 200. I don't know if it did break 200 or not today. But yeah, definitely amazing for all the Nvidia shareholders. PayPal, what I was going to say to Roy is that it was very interesting. Like, I even tweeted and I said, look, is it finally time to get back into PayPal? Because from an opportunity cost perspective, you could have bought at $70 way back when and have been holding this entire time while the market has rallied, which is coincidentally what I did with Sofi, along with, you know, some of the others that I stream with. And so people were talking about that opportunity cost. And then Sofi did, you know, a triple. And it did a triple this year, by the way. It was like $10, $11, and it went to 30. With PayPal, what I want when I want to be asking the question is I want to be asking the question when I perceive that opportunity cost dead zone to be towards its end. And I think that now with this earnings, I do think it's closer towards the end than it is towards the middle, right? That sooner or later, within the next 6 months or so, the market is going to wake up and realize that, oh, wait a minute, this company is here to stay, is here, you know, they're growing. And I mean, to Roy's point, they're buying back so many shares as a percentage of the total float. They're now issuing a dividend on top of that, and they're still doing new initiatives. And that's going to eventually bring up the stock because people are going to realize a couple things. Number one, wait a minute, this thing is undervalued and has been undervalued. And meanwhile, I've had everything else run up, and I want somewhere to preserve some of those gains, and that could be PayPal, because it's something that it seems like the market it didn't benefit in the rally that we had. And so I think that people might see it as a value storage for a flight to safety. That could also be me gaslighting myself into getting back into PayPal and holding a bag for the next couple of years. So I want to be careful about how I approach it. I definitely want to listen to the call at some point when I have free time, and I want to read the actual press release at some point so I can come to my own conclusions. I think with intelligent investor friends, like, I want to be able to give them the benefit of the doubt, because I mean, Roy's been advocating and holding, you know, this for a while, and I want to make sure that I can obviously do my own homework, but it's something for me to look at. And I think that's how I've come to learn in my own network, you know, the Tanners and the Matts and the Chris's and the Roys and the Nates of the world and the Manuels, that I won't necessarily invest blind because of them, but they do give me, they put things on my radar for me to research. And generally speaking, they have a very good sense, because I mean, that's one of the side benefits of doing this content creation, is that you're sort of plugged into the matrix at all times. When am I going to stop working and go into investing and streaming full time? When it actually becomes financially viable for me. Right now, full transparency, there are some months where YouTube does pay my rent. Most months, that's not the case. I think as I make more BM&R videos, that's probably going to be the case more and more often, but it's definitely not anywhere close to being sustainable. although streaming, like I think if I did it on a daily basis more frequently, like that revenue would obviously increase because I'm fully committing 10 toes in kind of thing. But yeah, I don't know. It's kind of a scary leap to make because I mean, I'm in an executive role in the company that I'm in, and it would be a big sort of lifestyle change. So I think when I make this change, it would be mostly like me acknowledging that I'm stepping back fully from like my career and doing whatever. Like I've made it, I've put aside some money, and I'm just doing hobby things for fun. Welcome back.
Thanks. Yeah. Houston is a third world country. So when
Well,
it comes to power,
so
you get a rain cloud. I mean, it did rain pretty hard, but you're in a place where it gets hurricanes, natural disasters. Thank you. And I don't know. Their grid is the opposite of resilient. It's so fragile. So, but yeah, the rains kind of died down and power looks good. So, yeah, I'm in Houston. If you're in Houston too, Hurricane Beryl. Like, man, it's miserable.
Hurricane Beryl?
Hurricane Beryl. Yeah. Do you remember it hit last?
Wasn't it like Marissa or something? Melissa?
Last May is when it hit Houston. It
Wow.
kind of inundated. It wasn't like a huge hurricane. It was big, but it knocked out power for a lot of people for like 3 to 5 days, which is stupid. But
yeah, I was just telling the chat that like this is topical with PayPal's earnings, because we've been talking about me potentially dipping my toes back in and opening a position because everything else has run. And I think, I mean, full disclosure, I'll tell you, and 350 of our best friends, I totally got FOMO when this thing popped 20%. I was like, damn it. Like I got FOMO. And I was really, even though I got FOMO, Roy, like here's the crazy market psychology point, and you guys are going to laugh at me when I tell you this. A part of me was hoping that the rally would hold so that we could break through those technical levels, and that would serve as confirmation to get in. I would much rather, this is going to sound so stupid, but I promise it makes sense. I would much rather buy at $85 than what happened today, because PayPal popped 18% and then it faded all the way throughout the day and it's up 3%. And the amount of FOMO that I felt at 18%, by the end of the day, when I was up 3%, I was like, I don't really want to touch it. Because it's just the market disrespecting it when it put up some great news. That to me said, okay, well, the market is not ready to have PayPal run yet, if that makes any sense at all.
So yeah, I think fundamentals tend to win out, but there's like two different styles of investing, and you shouldn't completely ignore either. Somebody that's a technical analyst, and I was actually looking at this too, like this, if it holds, it would be a breakout. What that means is you're not exactly in price discovery territory because it has been at that price, but it's been a while. And so usually that ends up bringing some traders and some people that actually put their eyeballs on the stock for the first time. But the bottom line is it's still the exact same company, Tevis, as when it went up 20%. The unique thing here is it's showing. Well, so we've actually seen this over the last 2 months too. Like the stock has been behaving differently. Its price action's still been lousy, but there's days where for no reason it'll go up 3, 4, 5%. And also down, but we've seen that with the downside. We haven't seen a pop like this before either. So what it's showing me is the market's actually paying attention, which is as long as there's nothing else that changes that. And I don't think that there would between now and quarter four. Quarter four is going to be great. The guidance is going to be great. And I think that that's going to give it, maybe a similar pop here. Could happen before as well, because again, I think a lot of the partnership with OpenAI was the pop or the reason for the pop too. But yeah, I mean, like I really feel for. I see a couple of people saying that they had calls that they were looking to sell, and it just, the price action, typical PayPal. So if you had told me like before, we're up in after hours actually, so we're up like a little over 5% today. If you told me that we'd be up 5%, I'd be like, yeah, cool. Must have been pretty good earnings. So no complaints really. I think quarter four is going to be the one. Said it, by the way, prior to this quarter. So don't just assume that I always say, oh, it's the next quarter. It's the next quarter. It's not the case.
Yeah, and I think I do want to have a position. I don't know to what size or what degree. Probably really small position, quite frankly. By the time that we report the fourth quarter earnings, one thing that I've been doing is I've been closing out my leaps, and I haven't quite closed out my SoFi leaps entirely. I've closed out some of them, um, and I closed out all my HIMS leaps and some shares, honestly, for HIMS, just super small, portfolio management. And I've been buying more Nebius, but I think that in the next month or 2 months, by the end of the year, I want to be fully out of my leap, because a lot of my leaps were expiring in 2026. And so it's like put up or shut up time. Like I need to convert to shares or I get out. And in 100% of the cases, I'm getting out. I'm still going to leave my leaves on for 27 and the 28s that I'm opening. So I'll have some buffer room, I think, to start adding some stuff. And I'm probably going to start layering into PayPal through some cash secured puts, even though I think the premiums are not great at all.
They're better than they were. They were absolutely trash. But again, there's been more volatility in the actual share. I expect after today, because when you, even if through earnings, if you pop up, almost 17% and then it comes back down, that's really good for premiums too. So I'll have to look, but they were absolute trash before. Now, one other addition too, because we're going to talk SoFi in just a second. The results have been solid to good. Quarter four, I think, will be really, really strong. Better than expected, triple beats, and then you buy, like the market buys it up and then it sells it off. Does that sound? I already spoiled it, but does that sound like any company you're familiar with, Tevis?
Sorry, I buy and then it comes down.
So, is there any other company that we could maybe take a lesson from that is in the same or similar sector who would beat on earnings, triple beat?
Oh, yeah,
The
I know
stock would
exactly.
run up and then it would sell off every single time.
I know exactly what you're talking about. But they actually came down and then they went back up towards the end of the day. So
So the pattern broke. It was a long established pattern and it broke. Why did it break? Part of it was macro, but a lot of it was just fundamental execution. Again and again and again and again, they were executing and then even accelerating. We're seeing it's a very different company at a very different stage. So we're not going to see like 35, 40% revenue growth out of PayPal, or something has gone really wrong with inflation. But I think that we're going to see, now it may not be quarter four, but I think it is. We're going to see a break in this pattern at some point.
yeah, I think so too. But I mean, look, like you said it with PayPal, right? Like for every seller, there's a buyer, and for everybody who was selling at 80, because you're like, I'm done holding this bag, it's too heavy for me. There was somebody who was like, holy shit, like PayPal at 80, it hasn't been here for a year. Let me buy in, And so I think the same for SoFi, right? Like it's forming new layers of investors at $30, people who are buying it at 30, 31. And eventually whatever curse you might have had, or whatever pattern has repeated for the last 2 years or 3 years, as the price keeps entering price discovery and breaking out of the technical patterns to new all-time highs, then you're going to break those same traditions, right? Because you're going to have a whole new investor class in with SoFi. And so I think that if you look at SoFi actually from a longer time frame, like a weekly or a monthly view, it looks amazing, man. It looks like it's going to go on a parabolic run. I saw Cantonese Cat posted that I was like breaking out of I think he was using Gann arcs or Fibonacci retracements. And it was like, from a technical perspective, looking great.
Yes.
Super strong support, bounced off the 50-day multiple times. And so it's just looking very strong.
Yeah. Let's talk SoFi earnings. And also, we're not TA guys, but let me make sure my balances are hidden. Good enough. Yeah, here is, why did I not? There we go. All right. I mean, this is just strong.
Well, before we jump to SoFi, and I'm happy to talk SoFi, do we want to cover the OpenAI PayPal news, and then we can put a bow on PayPal?
Yeah, we can.
Yeah.
So, I mean, I don't know how granular I want to get. I don't think I want to get very granular. Agentic commerce is not really a thing yet. you look at volumes, they're very small compared to traditional commerce, but that's the way the new products are when they're first initially launched. So
Mhm.
this is going to take, really, I think, several years to really begin to be like, oh, it's a 5% or 10% of commerce or whatever. It's very similar to this, and it reminds me exactly of this as mobile purchasing. That when the mobile phones came out, when the smartphone came out,
Mhm.
mobile commerce was not a thing. It didn't exist. And now we're at the point, it took a long time, where I think last year, or maybe the year before, was the first time during the holiday season that there were more purchases on a mobile device than there were on a computer. With AI, with LLMs, and with people just actually having this at their fingerprint on their devices already, I think that this is something that is going to ramp a lot faster than that. But yeah, I'd say give it 3 years, and that's maybe why the market. It's kind of unfair because the market will give a premium to any company that announces anything like this, except for PayPal. But to be fair, like, it's forward looking, but when you're like, okay, 3 years to any meaningful revenue, and it's not a guarantee. But with what they've been doing, like OpenAI was kind of the missing piece there because they already have partnership with Perplexity. They have a partnership with Google. They have a partnership with MasterCard, which they announced yesterday. The deeper partnership with Google, by the way, that they also announced yesterday, and then OpenAI today as well. And there's still some other players out there, but those are the big protocols that they're involved with that are on the back end for agentic commerce, and those are the big platforms as well. So pretty much no matter who wins and how it scales in, PayPal is extremely well positioned. They also solve a couple of things as far as agentic commerce that would be a challenge for most other companies. Now, you're going to see OpenAI partner with anybody and everybody. They do that. They're like Shopify. They're also partnered with Shopify. So don't read that as bearish of PayPal. PayPal, it's not going to be a winner take all, but it's going to be kind of like the mobile payments landscape where there's multiple winners as they continue to grow. But PayPal is positioned really well because one of those key things with agents is the KYC. You need to actually know KYC and KYB. Make sure that the customer is real and that you know them, you know what they're actually wanting to have. Otherwise, an LLM is going to be terrible and it will just hallucinate. And for Tevis, it'll be like, well, Tevis is a dude, so he probably wants a bat lift from Star Trek. And it's like, maybe he's not that big of a nerd. So,
but doesn't PayPal, can't PayPal fulfill the KYC need because it's already into ads?
yeah, KYC, KYB, because they're a double-sided network. So they reach not just consumers, but also merchants, which was an interesting thing with the OpenAI announcement as well. There's a couple other more granular nuggets there, but this is a big partnership and it is a big deal. And the market was right to give them a bid. Maybe it gave them a little bit too much too soon, but it's not a nothing burger. The market also reacted, by the way, like this with Google when they initially announced a partnership back in September. Deeper level of partnership, by the way, now. The big thing for me is Google said that they're using PayPal or Braintree as a key payment service provider across multiple different spaces, including Google Cloud. And I'm like, okay, that's new and that's really good. That's not a 3 to 5 years for agentic commerce. That's a today. So there's a whole bunch of stuff like that the market's just kind of underrating. And they're like, whatever, it's PayPal. It doesn't matter. It does. Agentic commerce is, though, not a near-term growth driver. It's basically future-proofing them. Now, the other thing that's really nice that PayPal has is agentic commerce does a lot better if it has a functional guest checkout too that's able to be used on the merchant system. That's PayPal Fastlane. It also works a lot better too if you have a wallet that is interconnected with 2 billion people in the world and also, I don't know, probably 100 million businesses. That's PayPal World. And it works even better if you have a cryptocurrency like a stable coin, so for frictionless, especially in the cross-border context, transactions. Also PayPal. They're positioned so freaking well here. So I did have, I had small concerns back in 2023. I'm like, if they don't start ramping up their scale of innovation, they're not a dinosaur. They're not going extinct, but they definitely have some pain that they're causing themselves. But they've stepped that up. I don't have any of those long-term concerns. Short-term, it's just a matter of time with a lot of these things. Anyway, yeah.
Yeah, I thought it was really interesting. And because I mean, look, I think now with Atlas, that ChatGPT's browser, and as we move further into this world where you're going to have LLM powered or enabled browsers, I think integrated payments and integrated checkout is going to be super relevant. It would be interesting as well if you can integrate so deeply that if I'm like when I'm in the account settings in my chat GPT, that I can also just put in like I can authenticate my Spotify, I can authenticate my PayPal, I can authenticate my bank account, I can authenticate my Instacart, I can authenticate whatever, so that I don't have to go log in all these websites, and I can have a centralized sort of decision-making nucleus, and then go to my Atlas and be like, hey, you have access to all my stuff. You have access to like, my credit card through my Instacart, password. You have access to my PayPal account. If I want something, go do it for me, and I can reduce the friction in the authentication layer as well. I don't know how that might work, technically speaking, from a user experience perspective. I mean, but that's the first thing that it really came to mind, was just this deeply embedded integration whereby the LLM is the hub and all of these other services around your life are different spokes that you can then plug into one time, and it can just go. Similar to how, Plaid is for like your financial life. All your banks connect with Plaid, your government, when they collect taxes, they do it through Plaid, so on and so forth.
Yeah, that's kind of what PayPal World is in essence. It's that the synapses between all the that provide the connections between all these different. But yeah, it's early on that. You want to talk some SoFi?
So they said this is going to come in 2026, right? Right.
Which
the PayPal OpenAI integration?
Yeah. That the full integration is in early 2026. It sounds like PayPal World launches in. There's a lot of stuff that's launching, that first quarter, very early.
Well, I mean, look, to your point, right? Like, if Q4 is going to be the thing that sends this is just yet another notch in that Q4 timeline that confirms that, hey, look, Alex Chris is going to jump on the call, and guess what he's going to do? He's going to talk about this third quarter, or this fourth quarter. He's going to give guidance for the next year. And also, he's going to mention the progress that OpenAI has now gone live with the integration. Here's what the early adoption looks like, so on and so forth. And I think that like the convergence of all of those things into one big event is, I buy that thesis. Like I could see PayPal running on the back of this. But yes, we can talk SoFi.
And yeah, one last little thing is, some of the stuff that they're building is longer term, and it's harder maybe for analysts and stuff to like figure out, okay, well, how much is this going to be? It's hard for me. Advertising is one of those, which is a layup. And then they also have a lot of near-term growth drivers as well. Buy now, pay later. They talked about that. Venmo as well. Some interesting launches in quarter four, which I think will really help that top line revenue. So it all just kind of creates this big snowball of good things that are happening for PayPal. And how much is priced in after today? Very little, very, very little. And I actually kind of mentioned that even before earnings hit, whereas like the one thing with earnings is I was pretty sure what to expect on the earnings. But when you have a company where almost everything negative is priced in and almost nothing positive, that usually sets up for a nice surprise. And I think that's what quarter four is going to be doing. So, yeah.
Yeah, I'm very I think we're going to be talking a little bit more about PayPal. It's going to come to my short list of things that I'm watching over the next 3 months, but this is all very exciting. So let's move over to SoFi, Roy. I mean, you were on the call. What do you think?
Yeah, really good quarter. We were maybe just a little bit bullish on most of our numbers. Chris was right about, I think, perfect there on a lot of them. What I really liked hearing, and I thought was most important, was that the loan platform business, both in terms of numbers, but also in terms of existing partners going to SoFi and knocking the door and saying, hey, we want to increase the size of this deal. Demand is immense for lending products. We're looking at 2 more rate cuts to the end of the year. SoFi isn't counting on that. They don't necessarily need it, but man, top line revenue growth is growing great. EPS, it was actually right where we had expected, I believe, 11 cents.
Yep.
Yeah, they're doing all the right things. Some people, I don't know. I think the only thing that people were not happy about, good to see you, Danny. I think the only thing that people were not happy about was the stock price, and even that fixed itself. But I mean, SoFi has been on a ridiculous, and I mean ridiculous run. And Legend is just gonna. Oh, there we go. Nope, it's gonna lag my computer. I can't show the chart. It's not uncommon when a company is killing it and doing great, but it's way up, to take a little bit of a breather. It's not a bad thing. I saw somebody mention that they bought at $28 and they were thrilled because, I mean, we're higher now. Plus, I mean, it's a really good, really strong company with ridiculous tailwinds as well. I kind of wish they have the same issue as PayPal in terms of being way too conservative with their guidance. But if you actually listen, I mean, we listened to the call live. If you just read the transcript, you'd be like, no big deal. Noto was really bullish, like really bullish. By the way, not to go back to PayPal, the funniest thing this morning was when Noto went on CNBC right before the earnings call, and then Andrew Sorkin asked him about PayPal, and I'm like, this is hilarious. So
yeah. Yeah, I mean, like, I think it was like, this is the thing, man. You have so much like pent up demand, let's say, or pent up hopium for PayPal, and people just like want to believe, but they get abused, like they're in a toxic relationship or something, and then like it popped to the point where you're asking a different fintech's company on their day. This is supposed to be like their day about some other freaking company. Like, of course, anything was going to respond like that.
Yeah, it was so funny though. This was the other piece that I thought was a huge highlight. It's great, is the products. Products, usually we don't care too much about products. We used to, like a year ago, just assume, hey, it's going to be 1.5 times whatever new members that they have, which not necessarily all those are new members, but you know, they did a good job of cross-selling. They have this flywheel here. This is just on the financial services side, and they continue to release more and more products. But we're actually seeing a decrease in acceleration in terms of, like, you can see this here, 53%, 41%, 32%. And this was a reacceleration. Now, these are annual numbers, so you know you can't read too much off of a single quarter. But if you look at the actual numbers, it's towards the end. Members, products, there we go. It's looking good. I mean, no matter what you're looking at. So here's the financial year 2025. That's a little small.
Mm-hmm.
And now I can't see so lending products and financial services products. You can see here, this is a really nice acceleration in lending, also a nice acceleration in financial services, and even the tech platform. Like the number of products were down, but I wasn't expecting too much. Tech platform, you know, put up some growth, which is great. That's more of a next year thing, I think, for acceleration of the tech platform. But what this basically means is that the flywheel is working. And as they release more products like the crypto invest product, pay by crypto, all of those sort of things. Now, that doesn't mean new product, that it's integrated in the app, but they are doing a good job of cross-selling. And that was really important to me. I don't think I shared too much about this, but I did mention with you guys, because I'm a SoFi user. If you're in the comments, by the way, if SoFi is your bank, did you guys just get like practically spammed by SoFi as far as product offers and opportunities this quarter? Because I mean, it was many each and every day, to the point where I actually had to turn off a lot of notifications. But the nice thing is that sort of advertising costs them nothing. And there will be people that take them up on these offers. And, you know, we also saw student loans. There was a weird mention, by the way. So actually, I'll put a pin on student loans. Tevis, what were your overall broad thoughts? And we're going to talk, you know, on a more deep level on Saturday. But
overall broad thoughts was obviously good. I think our expectations are a little bit higher than the streets, and as a result of that, we might look a little bit deflated on the actual earnings call. But you got to also keep in mind it's 6 a.m. and we're also like crunching numbers and trying to make live tweets during the event while we're like, it's just a lot of things that we're managing. So that's, I guess, my default RBF. But what I will say is they're executing on all cylinders. The financial services platform is amazing. And the guidance, they raised it. I think they're going to do very well. The tech platform continues to be a disappointment. And, you know, similar to what I said about PayPal, right? Like this pent up hopium. Like, did you see the stock just rallied off of that Southwest announcement. And meanwhile, it's like, dude, like like Stockgo talked about this, the Southwest announcement weeks before. The community has found multiple partners, the rewards platforms, the hotel hospitality, chains, whatever. And so it's just like, I feel like the market is so starved for more logos about these partnerships and more acceleration in the actual tech platform numbers. I mean, 158 for the tech platform, it continues to sort of decline, or at the very least plateau. I expected 166, and I said, like, look, that's me sandbagging my expectation of 166. 158 was not even in the realm of possibilities because they were at 160 before, and so, like, I never even thought that they could be negative quarter over quarter for tech platform accounts, and yet they were. And this is not the first quarter where this has happened either. So I still would say, like, if I had to rank it out of 10, all things considered, I would say 8, maybe 8.5 out of 10. There's obviously things that we can nitpick, but it's undeniable that this business is chugging on all cylinders. And I think, I forget who it was that said it. Maybe it was Josh, maybe it was somebody else. But I feel super comfortable holding a massive SoFi position and sleeping super easy at night. It's 25% of my overall portfolio. And it's like, that's the stock that I worry the least about in my portfolio, because I know that I'm in good hands with this management team. I know that this management team will underpromise and overdeliver, and they have consistently overdelivered over the years. They deserve every share that they unlock in the PSUs, and they're going to continue to overdeliver because it's in their DNA. And it's just accelerating, and it's very rewarding to see the retail, FinTwit, / Wall Street, just the market as a whole, start to recognize them for it and actually give them the light of day. It's like if PayPal actually held their gains today. Like, how rewarding would that be as a longtime PayPal holder?
I mean, miracles have happened in the past, but yeah, not that one today. This quarter, I actually think I'm going to have to do some thinking. It might be in my mind as good as the previous quarter, just because that flywheel is, well, for one, I'm super bearish on the tech platform. Like, not super bearish, but I'm counting it, considering it doing absolutely nothing through the end of the year. Quarter 4, same thing. Next year, I think it'll do a little bit of something, but AWS of fintech thesis is busted for me, in my opinion. The loan platform business more than makes up for that, so I'm not bearish on it by any means. So going in with those kind of expectations and seeing actual growth, although the number of people actually using the platform going down, not a big of a surprise. There's some churn there, at least from Chime. They've already moved all their credit card offerings over to their Chime core, and they're doing the same in the second half of the year, before the end of the year, for the debit card side. They're paying a big penalty for that because they're breaking contract early. I think it's $18 million going to SoFi in quarter 1, which will be filling in the tech platform. By the way, I think some analysts are pretty lazy with SoFi, and they're going to miss that. And so there's going to be a even more significant revenue beat in quarter 1. But yeah, that's 2 quarters out, so it's a little bit further away. But yeah, that flywheel, seeing that accelerate, loan platform business accelerate as well. I love it. And then you have just an improved cadence there for SoFi in general. So very, very good earnings. And yeah, I wore SoFi blue today too, by accident. I didn't even think about that.
And look, I think one thing that I really liked was management's sort of forward-looking vision, talking more about product innovations. I feel that's a recent development over the past year or so. And I say recent because we've covered this company for like 4 years. Over the past year or so, and more specifically over the past 2 quarters, they have been predominantly talking about new product innovations, what they're doing from a product perspective, the level 1 options, the international transfers through the blockchain, which they mentioned on the call as well. And they specifically started talking about the stable coins, as well as the crypto coming back in December. They started talking about the Cash Coach being upgraded to the SoFi Coach, which is like this AI-powered financial advisor in your pocket. And they started giving out some rough timelines on these things. They said, hey, early 2026, this is coming. Mid 2026, this is coming. And so I thought that was fantastic. It's exactly what I want to see, because I want to have catalysts, not only as a content creator covering this stock, but I want to have catalysts just as a holder to have things to look forward to, right? And I think it's going to be like this to me is a subtle nuance of them being more on the offensive. It's just the fact that they're talking about these things more openly than they were before.
Yeah, speaking of catalysts, we've talked about this before, but this is end of the year, CME Fed watch, rate cut probabilities. It's all the catalysts you need right there. 2 rate cuts, 91.6%. There are some that say, oh, there's just going to be one. That's above what Sofi guided for. Now, next year, things are going to move around a lot more as well, but there are rate cuts coming, hopefully for good reasons, a slowdown in inflation, and the rates are just too high. They're not near the terminal. We'll have to see, but yeah, that it's like for a lot of companies, it's a good thing. For SoFi and for any lending platform, it's ridiculous what they built in the loan platform business. And it sounded like I need to go through the transcript again, but Lapointe hinted at SoFi student loans being offered through the loan platform, unless I completely misheard that.
Yeah, they mentioned non-personal loans through the loan platform business. Let me see if I can pull it up because I have the recording from non-personal. Yeah, so he said, as you, this is a quote. Question comes from Andrew Jeffrey of William Blair. As you see faster growth in non-personal loans business, I think it's really encouraging from a diversification standpoint. Does that change your thought on how you fund the balance sheet? And they said, Anthony said, there are definitely opportunities in the loan platform business from non-personal loans, and Chris and the capital markets team is working on that. And then a little further down, Chris Lapointe highlighted some of the deals that they were working on. I mentioned this in the tweet as well. Let me see if I can pull it up. But yeah, very exciting stuff. If they can expand the loan platform business outside of those personal loans and just widen that net out even further, I think it's just going to continue their massive acceleration, right? They also mentioned that if the government decides to sell their student loan portfolio, we'll dig into it. It's going to be a great customer acquisition tool, not to mention the fact that we can make a significant profit off of the portfolio of assets. That's a direct quote from Anthony Noto.
Yeah. And that's not priced in. Like, I don't feel like that's priced in at all.
Here we go. Yeah, so here we go, Roy. Let me share this. I hope it's the right screen. And it is not. This is what I'm looking for. Okay. So by Chris Lapointe, a number of existing partners came to us and asked to upsize their commitments, not only in Q3, but Q4. So we expect continued momentum to occur in the last quarter of the year with regards to the loan platform business, of course. And then we saw some growth in new partners as well as the expanding credit. So net, it was growth across the board. And this, of course, is the response to this initial point that I read out, that there's opportunities on non-personal loan side of the business. Funding off deposits is definitely an element that drives our durability and our confidence in lending. The dependency on deposits will likely reduce over time, and our cost of funds will also likely come down over time. So first, I'll get your reaction to that and your thoughts, and then I want to share something else real quick.
I mean, that's a key part of the bull thesis for me. And I assumed that we would see that, but it's not always the case. My assumptions can sometimes be way off. We looked at rate cut probabilities here, and if they cut rates, but we expected a pause for 6, 8, 10 months, there'd be some front running just because a lender is like, oh man, I want to lend at higher interest rates, and it's a lot easier given the Fed's fund rate where it's at. Versus what we're actually seeing is just persistent rate cuts, 2 more expected through the end of the year, which is a demand lever, but also more next year as well. So you would hope and expect to see a lot more demand out there. Banks have been talking about this in other earnings as well. And then we see, lo and behold, SoFi is experiencing that not only as far as their own lending as well, but what they sell off through the loan platform business. And being able to do more than just personal loans, which, I mean, there's nothing that prevents them from doing this at all. It's just more of a matter of meeting the demand that somebody else has for a certain type of lending. And with lending, like the way that SoFi is positioned, home lending and student loans and personal loans are all very, very different loan types. And there are times in the macro where rarely all three will be like really good and a huge demand for all of them. But more often than not, you'll have like real estate doing really well, or student loans, just having a lot of tailwinds, or personal loans as well. And so it's important that they build out their ecosystem a little bit more. And there's a lot of type of loans too, where they are very small players, but they may be growing in the future, or they might say, hey, we don't want to touch this. We know how to underwrite this, and they'll have a lot of interested parties. There's no capital constraints there. It's a great platform and product. I think it clearly outperforms competitors as well, and that seems to be what we're seeing from other companies. So they have such tremendous tailwinds. And a couple of people mentioned it too. Unlike, we didn't get a breakout with PayPal, they didn't hold it. We are in all-time highs with SoFi, which is price discovery territory. So as far as like the price action and what we expect by the end of the year, like price discovery, you got to be careful with covered calls, because crazy things can happen. You look at Fibonacci levels and those sort of things, but there's no like resistance layer until you actually discover it. That's why it's called that. So usually in price discovery mode, you see a lot more volatility. SoFi is already an incredibly volatile stock. So we could see, I don't expect, or I'm not counting on rather, SoFi to hit $40 by the end of the year. It would be a little bit it would be expensive. It wouldn't be cheap. I'll just say that, but it's not expensive. I would have to recalculate given this earnings, but probably at the edge of my fair value, maybe just a little bit higher. But we could see a lot higher than that too, if macro is intact, just given price discovery territory, continued acceleration by the business. I'm not expecting though like triple digits. So don't could we see that? Yes, crazy things happen, short squeezes happen and stuff, but more likely than not, we're this third, like if you buy, I'm not saying buy today, I'm not giving financial advice. You can throw that up if you want, Tevis. But I'll just say it this way. If I bought SoFi today at 31, 32, I don't think that I'm going to be too sad with my buying price next year, a year from now.
This is true. And like, again, this is not a company that has done a 10x or a 20x or something that like it's wildly overvalued. And even for those companies, you can make a case. I mean, Roy was buying Palantir at like 170, 180 because you just believe that it's going to be a great compounder. And that's fair. But even you who are buying it at that price, we're not saying that it's cheap. I think SoFi is still cheap. And maybe it's fair valued by like the textbooks, but I think in the context of the wider market where everything has run, it's still relatively cheap. It's not PayPal cheap, but it's also not like Robinhood expensive or Palantir expensive, right? I think it's a more digestible price to be buying it at. And with a company that is still executing and still compounding their growth, it depends on what your goals are. But, I didn't sell a single share today. I think, in fact, like I would be a buyer if I didn't already own 25% of my portfolio. So I think it's going to be, and this is the same advice that I would give. Okay, hold on. This is the same thing that I would say to my family. Obviously, not financial advice because I'm not a financial advisor. YouTube, please don't demonetize me or ban me. But I would say, like, look, if you want to hold something that you can sleep easy at night with a company that's executing well, then why not buy it at 30, right? Why not? It's going to go to 40 one day. It's going to go to 50 one day. Now, if the story changes and the company stops executing, and I mean, I think we can touch on HIMS for a second, but if something like that happens, then okay, it's a little bit more nuanced, but that hasn't happened yet for SoFi. Like this perception is not broken for me. So why not? I want to keep all of my position and even buying more.
Yeah.
Okay. So yeah, Josh says I got to pump up those numbers. Meanwhile, his portfolio is 85% SoFi, and I definitely don't have $10 million like Josh does. So Josh, you have a better stomach than I do, sir. Roy, I want to have a little conspiracy theory with you, okay? And I want to get your raw thoughts on this because I saw this and I didn't post about this yet. I was saving it for this live stream. And I want all 500 of us to watch this together. By the way, thank you, 500 of you, for being here, either on Roy's or my channel. Drop a like, and just thank you for being here. Roy, look at this. Excited to announce Galileo, Sofi's tech platforms powering Southwest Airlines. We know this news. This is fantastic news. We saw the stock pump on this news. Look what happens when I click this tweet.
Interesting.
Interesting.
Huh.
So what happened there?
Elon Musk is conspiring against Anthony Noto.
Yeah, did they accidentally drop some news that they weren't supposed to drop?
Maybe so. Yeah, and it was interesting. We talked about it earlier, why they announced one and not the other. The other's already known too, but for travel partners. But yeah. Huh.
I don't know what happened.
So, yeah, I really hope PayPal, announces news all the time at different times. Like SoFi seems like, and I don't understand the strategy of like, hey, let's just save it all for the earnings call and shortly thereafter, which it makes for an exciting earnings call because you never know what they're going to announce. But like, hey guys, you can make announcements other times too, and not just be like, hey, level 1 options are live, and we're going to kind of hide like the really cool stuff.
Yeah, I don't know. It's not, and guys, I don't want to be the bearer of bad news, but I just see the things and I want to show you guys. I get excited. Okay, cool. So what do we want to talk about now? Is that it for the SoFi? Of course, guys, we'll be talking about SoFi much more in depth on the FinTech Friday episode, which will be on a Saturday because Tanner wants to get drunk on Halloween. He wants to dress up and then get drunk. I don't know if I should have said that, but it's going to be on a Saturday, and it's going to be an episode you won't want to miss. It's going to be a lot of fun. The episode after earnings is generally a lot of fun, and we're going to have a great group of people for that episode. So make sure to join us there. That's where we're going to talk more in depth about SoFi. Roy, anything you want to add there or not?
No, let's go on to the next topic.
Next topic. What's the next topic?
Probably Nvidia. By weight, that's probably just as important as the earnings that we went through. So let me pull up this here, and I'll mention some Palantir too, because I've actually been I've intentionally like not just brought up Palantir to bring up Palantir, but when there's partnerships announced. But anyway, this is the GTC event, and so Jensen was doing a lot of talking, not just Jensen, but also a lot of Nvidia guys. And these were the announcements today. Eli Lilly partnership, huge. Palantir partnership, huge. By the way, I'm both a shareholder in Nvidia and also in Palantir. This partnership is actually better for Nvidia as far as a business standpoint than it is for Palantir. There is a very interesting clip that I want to show you, though, in just a moment that has Jensen talking about this. Hyundai partnership, Hyundai partnership, amazing. Samsung, $1 billion investment in Nokia, it's fine. Uber partnership to build 100,000 robotaxi fleet. $500 billion in expected revenue through 2026. New systems connecting quantum computers to its AI chip. There was another announcement related to that came out after this post. And Department of Energy partnership to build 7 new supercomputers. And then I love this map, by the way. It's voting for NVIDIA. Yeah, they're the leader here in terms of everything relating to AI. It's not OpenAI, it's NVIDIA, very much so. And they're just positioned so well, kind of like, a lot of the strongest companies out there where it's like, okay, does it matter if Samsung or Nokia, which I know they're not really on the same level, went out? Not really. They're going to be doing just fine as well. So let me find that. Anything stand out to you? Don't talk about the Palantir one in particular from the Nvidia GTC event, which I just saw highlights of. I didn't have time to watch it today.
I saw a good chunk of it. I think it's funny that Nokia jumped 22%, like immediately 22% the moment that Jensen dropped that news. I mean, look, I think Nvidia is is so multi-purpose at this point. Like the way that they split out GTC in terms of the categories and all the partnerships for each category. CrowdStrike was also on that list. I think that I was watching Tanner and Amit streaming it like in between meetings, and Tanner wasn't really all that impressed, like all that shocked, I should say, by the news that came out. So I don't follow Nvidia that closely, so I wasn't all that shocked. I assumed it's just normal stuff, but the way that he presented it, and I think with the enthusiasm and with the scale that he was talking about, the magnitude of some of these partnerships, it's no surprise that everything pumped. Like Uber pumped when he said, "Hey, autonomous." Tesla dumped just because Tesla wasn't on a slide. It was like Mercedes Benz, whatever. Like for the autonomous slides, he pronounced Nebius, which I mean, whatever.
That is the way it's pronounced, though.
Nebius?
If Jensen says it, that's the way it is. You're going to argue with Jensen Huang? Come on.
Yeah.
He's not Huang, dude. I mean, he is, but sorry.
Yeah. So anyways, those were my my high level thoughts. I was just impressed. I was viewing it more like an entertainment event. Like I would view an Apple event more so than I would view like, something for news. I was watching the Nebius stock chart, and then I was watching the event, and I was seeing if there's a pop somewhere, but he didn't really talk about it, unfortunately.
So I want to show this clip. This is related to the Palantir thing, which I think is really cool.
This is the single fastest enterprise company in the world. Probably the single most important enterprise stack in the world today. Palantir Ontology. Anybody from Palantir here? I was just talking to Alex earlier. This is Palantir Ontology. They take information, they take data, they take human judgment, and they turn it into business insight. We work with Palantir to accelerate everything Palantir does so that we could do data processing at a much, much larger scale and more speed. Whether it's structured data of the past, and of course we'll have structured data, human recorded data, unstructured data, and process that data for our government, for national security, and for enterprises around the world, process that data at speed of light, and to find insight from it. This is what it's going to look like in the future. Palantir is going to integrate NVIDIA so that we could process at the speed of light and at extraordinary scale. Okay.
All right, yeah. So glowing comments of Palantir. What's interesting here is like I'm biased, but I think that there's two main leaders of the AI arms race. Alex Karp's talked about that all the money is not going into the direction at the time, this is like a year ago, of what a lot of the AI investment was going into in terms of the market. But he's like, it's all chips and ontology is where the real value is. And then we're seeing the valuation of Palantir. Of course, Nvidia is not trading cheap either. And so two leaders partnering, really, really good. But even though I have more Palantir than Nvidia, this is a partnership that's better for Nvidia, just in terms of they're getting a lot of money from Palantir for this sort of partnership. I expect Palantir's also being used by Nvidia too. But yeah, it's pretty cool. The biggest and most powerful company in the world mentions you and says you're the best.
Look, okay, so I recognize your bias, and I will raise you by being skeptical. And not okay, this is gonna sound wrong. I don't mean skeptical in the sense of like I'm bearish or anything. Like I don't disagree with what Jensen was saying. I think I think a lot of what he was saying is true, not just for Palantir, but for a lot of the partners. Like why would they want to partner with a company that is not at the forefront of their field? I will also say that it is to NVIDIA's benefit to pump the tires of all of their partners. Because what did he say there? I don't know if you picked it up or the audience picked it up. We power everything that Palantir does. In other words, they're a buyer of ours, a big buyer of ours. We want to keep them happy. And so I found it fun. I don't even know what partnership means at this point. It means that Nvidia is selling to all these people, right? It's the same thing. Like you have AIPCon, Palantir's conference. What do? Palantir pumps the tires of every single partner that they have. Why? Because they buy Palantir software. And so it's like, well, I understand because they're B2B and all B2B companies that are vendors are going to do the same thing. It doesn't diminish the partnership at all. But it's just kind of ironic how the market sees it, because if Nvidia says like, we power Uber, Uber goes up. It's like, well, no, it should be Nvidia that's going up because they're the ones that are collecting the sales from Uber. Like, why do they have this aura around them that whoever they sell to magically has their market cap go up? It's just, it's kind of funny.
Well, to be fair though, Palantir just goes up anyway. Like that's just what the stock does.
Yeah,
so
no,
they didn't really need. But and Nvidia had a good day too. It actually is above 200 now. Sweet. I missed it earlier, but yeah, we're looking at 201, and then it's 203.82 after hours. So I was glad I was careful with covered calls. Like all earnings season is Nvidia's earnings season, not just on the day, because you have stuff like this and all the mega. Yeah.
This is big. This is the biggest rally intraday for Nvidia was when they talked about numbers. Yeah, let me throw this up for you, right?
Yep. So this was the other little piece that was really interesting. So this is the actual press release by Nvidia. This right here. You look at this, and there's also a later paragraph too. Lowe's is pioneering operational AI for its supply chain logistics with Palantir and Nvidia. Like, wait, what? I thought this is a Palantir Nvidia partnership. What's going on there? And you have a lot more here as well. And basically, the backstory of this is a partnership that breeds partnerships, and it's kind of what Palantir does.
Right.
Lowe's had a pretty horrific tech stack, and it was very much hindering their ability to operate in the market. They partnered with Palantir. They were one of those, I think it was about 2 years ago, where they were very vocal, and they pursued it, not like some companies do, where they're like, you know what, we'll give it a try, and we'll try it in this one area. Lowe's is like, dude, you guys need to come in and save us. Now, that's a little bit exaggerated, and they did. That partnership has borne a lot of fruit for Lowe's, also for Palantir as well. And here, Palantir and Nvidia are like, hey, let's partner. Mostly it's Palantir using Nvidia stuff. So you're right. It should pump Nvidia more than Palantir. But then you have a very interesting add-in where like Lowe's is like, hey, me too. Don't forget about me, guys. And so then they partner both with Palantir and Nvidia. In essence, this is marrying the finest tech stack as it relates to software, which I know Nvidia does more than just hardware, but with the finest in hardware, which is Nvidia. And this partnership allows them to, I think Lowe's is going to be just one of many customers that may even be existing clients for Palantir that translate to a higher spend on, of course, Palantir and also Nvidia products as well, which fuels that net dollar retention, which just goes straight into that revenue year-over-year growth. It wouldn't shock me, Tevis, if we see several quarters, between now and next year that are seeing 50% year-over-year revenue growth again. Like it's
for Nvidia or Palantir?
Palantir, not Nvidia. Nvidia, that would be great too. The Nvidia revenue piece. So, like, if you want to talk about that, the $500 billion over 5 quarters.
Yeah, it's great.
That's it.
You can't have
$500 billion, whatever.
Like, you can't have a 5 trillion market cap and not get to put up numbers like this. You need the 500 billion over the next 5 quarters to be able to justify that 5 trillion market cap. It's like you're keeping the same ratios, you're just adding extra zeros.
Yeah, I thought it was a pretty impressive event, but it shouldn't be surprising. Nvidia is, like Michael Jordan. And so, like, Michael Jordan, when he's in his prime, he puts up 40 points in a game. People are like, yeah, it's Michael Jordan. So that's kind of what you get with Nvidia. Yeah.
Just 40. I found this also funny. 500 billion ex China, by the way. It's kind of interesting. Do you know how Jensen finished GTC? Like, do you know what his last words were?
I do not.
4 little words that some people in the audience might know well. Make America great again was how he how he wrapped up the GTC event, which was also in Washington. Yeah, exactly. So I find it funny that Duck is like, oh, ex-China, by the way. It's like, yeah, I think he sent a little message with his parting words there. He also praised Trump several times for stoking innovation in America and basically being a boon to the whole space. Now, I don't know how much of that is like political, ego stroking versus genuine, but I think it's definitely benefiting Nvidia and their positioning.
Yeah, no, yeah, they're positioned very well though. So yeah, that's I didn't know that he said that at the end. That's cool.
Yeah, the interview lady afterwards was really trying to get him to say he was pro MAGA. I mean, of course, man, like they need something to write about. So 500 billion over 5 quarters is not impressive enough for them to write about. They have to write about this shit. Anyways, what's our next topic, Roy?
Maybe he released some sort of like AI infused like cheese grater or something, and that could have been the reason why I said it too. So,
oh, speaking of AI infused cheese graters, did you see this new robot?
Oh yeah, the robot lineup. Why? Okay, we got to talk about that. Throw up that screenshot.
Do you see how my brain jumped there immediately?
Yes, there's something missing. Let's see if the audience can find that out as soon as we put up the screenshot. That's really weird, and I don't know what's going on with that. So
the screenshot of the robot, I think I sent it to you on DMs. Hold on, get it up.
I can look for it too.
Here we go. I got it up. All right, you guys ready for this?
Yeah. What's missing?
Here we go. What's missing here? So we got 5'6" height, 66 pounds, 4 hours battery life, soft body made from 3D polymer, 1X Cortex based on Nvidia's Jetson Thor, 22 degrees of freedom for hand dexterity, can lift like almost triple its body weight, can carry about 80% of its body weight, 4 mics, 3 speakers, 2 8-megapixel cameras, and 22 decibel max noise level. The Neo Home Robot.
So this was the image that I was thinking of. So I'm pulling it up in this end, but if you want to kind of explain what you were seeing there.
I just read out the stats. I don't know what you're going to refer to as what's missing. It looks like a
so there's this lineup. Oh, here we go. I found it. It's in a video here.
Yeah, I see what people are saying. I'm not going to throw it up.
Well, that's okay. Yeah, here we go.
Oh,
so if you look at, well, I can't find the screenshot. I found the video though, and it will show it here in just a second. So I won't even have sound, but if you want to throw that up here. So Jensen's walking back on stage. You can see all these bots here: Disney, Agility, Boston Dynamics, Nvidia. Jensen, I love that. I don't think he's a robot, but maybe, if you look at this, and they had, maybe it was earlier in the presentation, I'm not going to find it now. There was no mention of Tesla, but he said this: my friend Elon is also working on this. This is likely to be one of the largest new consumer electronics markets and surely one of the largest industrial equipment markets. But they didn't show Optimus at all in that lineup. I thought that was really weird to both not have it there, but also clearly nothing's wrong with it because he mentioned Elon. What is going on?
This is exactly what I said before, man. You're proving my point. He is such a brilliant politician. Doesn't put up Tesla, doesn't mention Tesla at all. And then he's like, my friend Elon's working on this. So you're like, oh, he's good. Like, they're good. Even though he didn't mention Tesla, it's not like, oh, what happened? Like, it doesn't open the door for speculation. It's pretty great. And Elon always has nice things to say about Jensen. So clearly Jensen is playing, the 4D chess correctly.
Yeah. And J Chem in your chat, 724, he got it right. Tesla doesn't use Nvidia chips. I mean, they're not. I think that they do use Nvidia for a couple of things, but it's not mostly they try to do everything in-house, or not necessarily try, but they do. They're very vertically integrated. So what they were displaying is all the people that were partnered using that Jetson, whatever it was, the AI brain, in essence, that Nvidia developed, or some sort of AI product. And Tesla does not. They don't need it. So that's not bearish Tesla at all, but it's really interesting that they would showcase that, mention it, but just kind of like, yeah, he's a good salesperson.
Yeah. Roy,
Yes.
back to the topic at hand, my friend. Stop dodging the subject matter. This little guy could be yours for 20,000 measly dollars. Look at him. He's so cute. Don't you want this little guy in your home?
No,
Why
that's
not?
horrifying.
He looks like he has clothes. He wants to hug you. Look at that. Look. He's a helpful little guy. You can name him. He can vacuum your carpet. He can clean up your house, carry your groceries, carry your
Yeah.
plates around.
The uncanny valley is very active here. So I don't know. Like, am I the only one that finds this absolutely horrifying?
I mean, it's pretty Black Mirror-esque. I saw this screenshot of, oh man, I don't know if I want to be scrolling down this like this, but there was a screenshot of like a close-up of its face, and it was just like it was like the caption was like the last thing you see before before the pillow smothers your face, something like that. It was just this little guy's face. Man.
Yeah.
Anyways, $20,000 pre-order starting right now. Chris Camillo put in a pre-order. A bunch of people put in a pre-order. I was thinking of putting in a pre-order. It's 100% fully refundable, by the way, and deliveries are starting in 2026. I want a little friend, 5'6" little friend that can do my laundry. $20K or $500 a month.
It looks so weird. I don't know.
Dude, think about it this way: $500 a month. You could have this little guy for a year. That's $6,000 for you, and by that time, Optimus will be out with their bot, and you can just like return him.
Yeah, we'll see.
But you can't. I was reading the FAQs. You can't get him wet. You can't take him outside. Yeah, I think only his like hands are waterproof. There's a whole bunch of like little things, disclaimers, not to break.
That kind of defeats the use case for me, though. If I can't get him wet and take him outside, I mean, I was going to have him set up sprinkler system and start it and run through. But
yeah, out in the rain.
Yeah,
you wait there, bot.
Go mow my lawn in the rain.
Oh man, this is hilarious because some people are absolutely gonna do that. Colin Benson.
I don't know, man. It's cool that on the consumer side it may be. I think it's a little bit early. We'll have to see actually how good it is. I expect the use cases are pretty limited at first, but demand's not going to be a problem once they actually have a product that works really well, and it's going to be multiple winners too. So should be good for Optimus, but Optimus may not be ahead here. But I think Tesla's strategy is kind of like it is with full self-driving, where they're not necessarily the first mover, but they're able to scale better than anybody. So
yeah, dude, imagine what happens in Texas with Roy's power grid as it is when he's trying to charge his bot. It's like the bot's going to go plug himself in, which is cool. It's like a MagSafe charger. It just goes plug itself in. It's going to drive my car. I mean, maybe one day.
Instead of full self-driving, just have the bot do it.
Yeah, there's some of these comments that I really want to put up, but I'm not gonna.
Yeah, I saw some of them. So.
Yeah. So, anyways, actually, I think that dovetails perfectly, Roy, into our next topic that I'm really excited for us to talk about. So, naturally, with this $20,000 robot that can come in your house and do your laundry, the next topic that we want to talk about is massive layoffs across the board. Roy, what do you make of all of these like giant layoffs that we're seeing? UPS, 48,000 employees, Amazon up to 30,000 employees, Intel, Nestle, Accenture, Ford, Novo, Microsoft, PwC, Salesforce. Everybody's laying people off, apparently. Is this 2022 all over again?
So part of this is companies lay people off anyway from time to time. It's not a huge thing. UPS, that's bearish. That's not good. That company is really struggling. Probably they had some fat to trim anyway, but it also I'll say, like, if anyone's impacted, I've been impacted by layoffs before. It's back in 2009, I think, in 2008, 2009. It's terrible. And I'm sorry if anybody's going through that. I never really wish that on anybody. UPS, though, very much a struggling business. Amazon, like they've done this 3 out of the last 4 years. So it's not, I think it's like slightly higher. These are more mid-level managers, and that's something that AI efficiency and AI gains can really help replace. Hopefully, also for like school administration stuff too. Intel, it's a business that's done really terrible, so they needed to lay off. And then you get to a lot smaller scale. Like there's some that are struggling. Novo Nordisk, Ford, Accenture as well. PwC, I don't know. Salesforce is, I don't know. They're trying to, I think, increase the stock performance, and so that's an attempt there. But a lot of these are like Target, Kroger, no big deal. Meta, like that's nothing. Applied Materials is a little bit surprising, but yeah, I think that the last sentence there, if you could scroll down, I think it says that the labor market is clearly weakening. I think that's wrong. The UPS one is really the only one that really got my attention. The rest of them are like, yeah, these are companies that had way too much fat, overhired. They're trying to get leaner. They're trying to fix issues with their stock. Competition is killing them, so they don't need the workforce. And then you have UPS, which that's a lot. So if you see a bunch more like UPS, they're very abnormal for a company to do. That's when I'd start to get worried. But I think most of the impact, like from AI, from robotics, that's going to maybe start hitting 5 years from now. And the market is forward looking. That's one of the reasons why, by the way, I expect, although there's nothing guaranteed, that we're going to have a persistent bull market until 2029 or 2030. And what stops that is consumer stress, just because the job losses really are mounting. And it's not a one-for-one replacement with new jobs offered by AI.
Yeah, I saw somebody commented saying like, oh, that sounds like rate cuts. Like it's actually quite the opposite. Like if you got rate hikes, then I would understand companies tightening and as a result of that cutting jobs. When you have rate hikes, the market goes more risk on and like you don't have really cuts. So these are like efficiency optimization cuts. I mean, Amazon flat out said that it was like efficiencies that we won't need so many employees doing these jobs. And the subtext there is that AI is going to do more of these jobs, especially in the context of Amazon paired with robotics. I think they have like the highest percentage of robotics, per head from their employee count. So it's really scary because it's like we've already started to enter that future that even last year or even 6 months ago, we were talking about on the what was then referred to as the Sofi Weekly After Hours show as like this futuristic Black Mirror scenario where people are going to lose their jobs. And we're talking about UBI and we're talking about like robots replacing people. It's like, well, shit, dude, you just had a robot that was announced today for $20,000 that's going to start ordering in 26. And you have like 100,000 people laid off across these different companies. And they're quoting efficiency in AI. It's like, you're already living in the future, man. You're already like, it started. So it's scary because it's going to force by choice or by force, it's going to force so many people to adapt. And it's going to be a question of, can they adapt fast enough for the companies that are laying these people off to actually see the efficiency unlocks? Because if you replace all of your staff, let's say Amazon replaces 30,000 people with AI algorithms, scripts, and robots, and it's like super cheap cost per query or per token, as opposed to per person salary, the savings that Amazon is going to have has to be offset by the potential loss of revenue that they might have for those 30,000 families that now cannot afford to buy Amazon products. And so what is going to be that natural chasm in the economy? Like how many of those 30,000 families or people, let's say, are going to find replacement jobs to have the disposable income to keep these companies afloat, the same companies that are today firing them? And so I don't know what the answer to that is.
Yeah, it's further ahead. This is too early for really much of that, but market is forward looking, but it's still like way too far ahead. I do think, with where the market's at all-time highs, there's very little negativity priced in, which we might not have a pullback until next year, but there will be a pullback coming at some point.
Yeah. So, I mean, like That's the scary part, right? Because like if those people lose their jobs today, like the announcement, and it's fucking stone cold like killer to do it on the same week that you report earnings. Like the emails went out to the staff today on Tuesday, and they're like, "Okay, we have earnings on Thursday, guys." So it's just ruthless. Like you couldn't wait 1 week.
So some companies wait and they announce it during their earnings. I think that's way worse.
Yeah, that's bad. That's very bad.
And I own one of the companies that did that, and yeah, I'm not going to call them out, but
so what I'll say is like, what is the next order of events? What happens next? So like, let's say, okay, we see 100,000 people. I mean, it's 100,000 today, right? Next week or a month from now, it can be 200,000, 300,000. Because like once you start this cascading effect, this domino, then more companies are going to follow suit, especially if, the Amazons of the world are doing it. And we saw, I mean, Meta and Amazon were the biggest ones that did it in 2022 as well. Yeah, I like this comment.
he might be.
He might be. What happens next, Troy? Those people lose their jobs today. They get a period of time, a grace period, if you will, 3 months or so. And a portion of them, we can hypothesize, let's say 50% of them will find a job within 3 months, maybe. What happens then? Is it going to be weak Q1 numbers, Q1 2026 numbers? Like when do we feel the impact in the earnings?
Yeah, it's because of severance, the way that that's done. It's usually not for maybe 3 quarters. Maybe we'll have to see. But yeah, it just depends on how that's structured. So not right away. Of course, the stock tends to pump on any cost savings news. Somebody mentioned that a lot of the people that they're laying off is HR specifically. There's only so many HR jobs that need to be going around. I think that's one thing that AI is going to do very well is kind of multiply what administrators can do. So there's less administration people that are actually doing a creative work to the business. I'm not saying HR is an administration is not, but they're doing what the business is actually in business for, not all the other things that you have to do as a business. Like my bigger concern, if we're going to look at macro type of stuff, is the SNAP benefit stuff here in the United States. There's
SNAP's running out.
Half of the states have sued the Trump administration, or around half, because of this. There's $6 billion still in the piggy bank. They need $8 billion for the month, and Trump and his team said, "No, we're not going to send it out." I think strategically and politically to put pressure on the Democrats to capitulate, but the sad thing is whether you're like for it or against it, like that hurts the people that can least afford it. There's 41.7, I believe, million Americans that are on food stamps. It's something around 13 to 14%, a lot higher than I'd like it to be. I don't think it should be that high. Inflation has certainly not helped. And there's some fraud. Like I've seen fraud and I've known fraud firsthand. So people that say that there's no fraud in SNAP, they have no idea what they're talking about. But most of the people that are on that are not fraudsters. They're people that have very low, very little income, no income at all. And it's not a pretty picture. No matter how you slice it, the longer this lasts, that puts stress. Some people, they can still afford to eat and they'll be fine. They'll just, make do with less. But there's a lot of people, and I know some people personally, like our church helps some people that are not able to work, that are older, that don't have a retirement, like everything went wrong in their life. And we don't want these people to starve to death. And one of the guys in particular, like he's an older man, he's retired. He has no meaningful income at all. And he's very dependent on SNAP benefits. And there's nothing for him. Our church is going to stand in the gap and help him. We have in the past as well. And there's a number of people that will help too, but we can only do so much. So there's a lot of people that are struggling. The sad thing is, if this lasts like through November and December, what kind of impact does that have on holiday spend? Most people are going to have lousy Christmases, which is like really sad. But then going back to investing, it's going to be really tough for the economy because, like even in PayPal, their guidance. So it's one of the softer things is they said they're being careful how they guide to not overpromise. Because they're like, it's really too early to tell how this holiday season will be. early read in October is, those volumes are not where we like. And because of tariffs, and they didn't even mention the SNAP stuff, but they mentioned some other things too. They're like, we don't want to overpromise here. I think it'll be fine. I think it'll get worked out. I think it'll be resolved. But man, it's bad for the lowest wage earners. It's not good for our stocks. More important that those people eat though. But yeah, and that can send ripple effects. That one domino tipping over and hitting another, where all of a sudden people are starting to default more on their loans, and it just. I'm not saying that that's going to be a catalyst for a bear market. Again, I'm seeing a persistent bull market through 2029, probably. But that is like the major crack that I'm concerned with right now.
Yeah, I'm so torn on like what to think. Like there's a part of me that is like the empathetic side around what are these people going to do, and then there's another part that's the logical side around this mounting wall of challenges, right? You have the federal government wanting to cut efficiency or wanting to increase efficiency and cut waste. And so you have the federal government cutting like a crazy amount. And then you have tariffs, which are not necessarily helping the situation all that much. I mean, in the long term, sure, they might if more jobs are created there domestically. But in the short term, it's going to have a lag period until it actually manifests. And then you have all of these companies who are cutting for operating efficiencies because their shareholders are looking for higher CAGRs. And I understand from the perspective of Amazon or UPS or whatever, like, hey, UPS was up, 20% today, something ridiculous after cutting 45,000 jobs. Well, sorry to break it to you, it's kind of a ruthless world out there. Investors in UPS see it as operating efficiency. And of course, the stock is going to go up because the numbers are going to look better. But nobody really stops to think what's going to happen to those 45,000 people. And when is that boomerang going to come back to bite UPS in the ass because nobody's buying packages and having anything delivered? And so there are systemic risks underlying that hurt the macroeconomy. And if you have all of these companies doing it at the same time en masse, then that's how you trigger downturns. I mean, that's how in 2022, like, Gerstner wrote the open note to Meta saying like, hey, you guys got to stop this wasteful spending, and Meta cut a whole bunch of jobs. And like, yeah, sure, Meta did a 7x from there, but the wider market and the economy suffered as a result of it. Now you could argue there was high rates there as well, which there was, and rates are going to come down. We're going to see the decision tomorrow. But again, it's like companies, and it's a rock and a hard place, Roy, because like companies are going to act in their best benefit. And on paper, it makes sense. If I was running my company, and I've done this exercise, but obviously not to the scale of Amazon, it's not 30,000 or 45,000 people, but like I've done the exercise where I've looked at the productivity and I've said, okay, who are my bottom 5%? Who are my bottom 10% performers? And then you sort of have a natural like spring cleaning essentially to keep the efficiency at the very top. But when everybody does it at the same time, then you introduce the possibility of systemic risk that the government then has to step in to solve, or that you're going to have a prolonged downturn period where you essentially need the dust to settle before you can go back to, only up, because those people ultimately need disposable income to be able to spend and buy shit that Amazon makes revenue off of.
Yep. Yeah, it's tough. I really like it's fine. And I know there's smarter people than I am that are thinking about what to do with AI layoffs, and they appreciate the risk. But that's so far out. There's more pressing concerns right now. So, but yeah, I think things will be okay. It's just, you don't want to be completely blind. And right now the market's pricing in almost nothing negative. So it's okay to take gains. That's all I'm saying. I have very little cash. But I will take some gains before the end of the year. I don't think we're cooked. I think that's the wrong take. One of the nice things about what AI and robotics are able to do, Elon's always way ahead on his timelines and overly optimistic, but he talked about this as the age of, wasn't abundance, but
it was abundance.
It was abundance. Okay. And even if like, let's fast forward 20 years. 20 years is enough time to have all these things, play out the way that they did. AI and robotics are a massive efficiency gain for businesses. It increases the work pool at a critical time when a lot of Western nations are decreasing in terms of population. Not a good thing, by the way, but it's going to pretty much ensure that productivity actually continues to increase dramatically. And that does have an impact as far as what countries, what governments, even what localities can do for those that are the least affluent as well. So I'm saying, like, in the future, in 20 years, there's things to figure out, but like people are not going to go and be starved and not get medical care and everything. Quality of life will go up over the next 20 years, probably by a lot, but there's going to be, if nothing else changes and they need universal basic income, there's going to be an even larger disparity between the rich and the wealthy, the asset class, and the lowest class. There may not be a middle class in that scenario. I hope I'm wrong, but that's a ways out. So I'm investing. So I don't want to put myself in a position where I or my family are reliant on programs like SNAP or anything. There were, like, I think 3 years when we first got married. We had 2 kids right away. We used WIC benefits. They were tremendously helpful. It's the only kind of welfare that we've like actively used. It was nice, a little bit extra food for the kids. But yeah, people that need it or are being hit by it, it's just not a pretty thing.
The worrying thing is, like, I mean, you and I are going to be fine, Roy, right? Because I think, like, we have a non-zero amount of dollars that are invested, which means that we have some type of buffer. The worrying thing is the growing disparity between the asset holders and the non-asset holders when everything pumps, because the money that gets pumped into the system goes into assets. And so you have this diminishing middle class to extreme levels at this point. And yes, the robots are coming. That's absolutely a fact. The entire question and debate right now is whether they're going to make it in time. Because if this is a 10-year trajectory or hell, even a 5-year trajectory, like, I don't know that bottom portion of the population that is already struggling to extreme amounts has 5 years to hold off or 10 years to hold off. So that's the worrying part to me, right? Like, there's going to be some, like, it's going to get worse before it gets better is what I'm trying to say.
Yeah, I agree with that. All right, you want to do Q&A, or were there any other topics you wanted to hit? Because I need to kind of wrap things up.
I mean, Microsoft plus OpenAI, but we don't need to talk about that because, like, I'm tired. Every week we have OpenAI partnerships. But
rapid fire then Q&A.
Q&A. What is BM&R doing?
The better question, and if you want to tag some, Tevis, and I'll be a little bit longer on this one, and then we'll be quicker.
Sure.
The better question is what they are not doing. This week, I believe, was the first week, at least as I've been a shareholder, that they did not buy Ethereum.
They did.
They did buy?
Yeah, that's correct. They did. Let me pull it up for you.
Yeah, I have it up here. Maybe I was wrong. It wasn't. If they bought, it wasn't much.
Here you go. So
yeah, there's the buys. Yeah, it was a smaller amount. That's what it was.
So yeah, yesterday they're at 1.3
Scroll down one slide.
million.
Number 2. That'll show the buys. Right
there. Yeah, it's a smaller buy, but it's
still good. It's funny because a smaller buy is a massive compared to anybody else.
Just 77,000 Ethereum.
Yeah, so they're continuing. I was going to say, even despite that, they're continuing to stack. They haven't staked yet, but it sounds like that may be coming soon. It needs to come soon. All the right things and the right measures are there. I think there are some people that expected this would immediately pop and go to like triple digits. I was never of that mind unless Ethereum like really absolutely took off, just because they're at the accumulation stage in Ethereum. They're over halfway to their goal. They've accumulated more rapidly than I expected as well. And I do think Ethereum is building a lot of really amazing things, and it's a critical technology. A lot of influences are happening as well. And over time, that's going to translate to positive price momentum, which will help Bitmine and also the other DATs, but I think in particular Bitmine. But for whatever reason, Ethereum is just kind of flat, even worse than flat over the last month. I thought October would send us maybe to new heights back to test the 5,000. That's not the case. So still a holder, still a buyer.
I mean, look, I don't know if you are caught up with the news around ETHzilla.
Yeah.
But like
the selling the ETH.
Yeah, I'll make a video at some point, maybe right after this, since I already have the camera set up. But basically, ETHzilla raised money this week to sell. They raised money through the sale of their Ethereum so that they could buy their stock. And their stock was so undervalued that they had some arbitrage to do that. So Nicholas over here is getting disappointed that BMNR is only buying 77,000 ETH. Meanwhile, you have other digital asset treasuries that are actually selling their Ethereum. So I think in the grand scheme of things, like, you're fine. You know, your Ethereum per share of BMNR just increased because every single week they're increasing that Ethereum per share in their holdings, now holding 2.8% of total supply. And it's not the biggest buy in the world, but it's still, they're still going through their plan in a weekly cadence. So I think that's the salient takeaway. Okay, next point. Where's the Halloween costume? We're not. It's not Halloween yet, Brock. Eventually, maybe. I think you answered this at the beginning, right?
Mm-hmm. Yeah.
Roy, do you still own Enphase? If so, we're getting wrecked.
Thankfully not. No, I back in April got out of it significantly higher than where it's at. Not because I think that the company is terrible or Solar is dead or anything. I don't. I just realized it's a very cyclical business, and I had no great understanding of when that cycle would flip. Now I feel like I have a better understanding of that, and it's still a little bit too early for me to get into phase. There are other energy plays, not Enphase, although I will look at Enphase. I'll still consider it, but I would say Enphase is not top three that I'm looking at right now for energy names next year, early next year too, not like waiting a full year from now. Some energy names have run way too much. I'm not going into those, but there are other sectors like solar, but also LNG that have been sold off. And then there's some picks and shovels type of plays related to energy too. So too early for me to talk too much about them because there's a lot I don't know. But if you are members of Tevis or I, the most recent after hours, we had Chris, Data Driven Investing, who is in this field, and another very knowledgeable person as well. And then all of us, Tevis and I, who don't really know anything about it, talk very credibly and very interestingly on exactly, a couple of the names actually that I'm interested in. So, and I think Tevis, there's a couple of names you're interested in that field too.
There sure is. So if you guys are not yet a member, definitely sign up. It's where the subscribe button is. There should be a join button. If you are already subscribed, you click that, you pay us and YouTube some monies, and then you will magically have access to videos that other people do not have whenever we post them. So
yeah, usually once a week, and they're always fun, like tech-driven discussions for the most part. Sometimes there's some weird Pokemon cards when Steve joins us. Love Steve, but yeah,
pay us some monies, and you get informations.
Yeah, I think this is the first time that I've actually mentioned and said like, hey, there's some value there. I think it's $5. I think we've all made it $5, so we don't. Yeah, it should include TikTok dances for Tevis. So Tevis, please.
The premium tier. Premium tier is.
I would be a member if you did that. I'm just saying.
Just TikTok dances. No, yeah. Man, I'll have Brock in my DMs offering me like obscene amounts of money to do crazy shit. So TBD.
So yeah, one last thing on the Enphase. I think midterms is probably, depending on how those look like they'll play out, then may be the point, because the market is forward looking to at least that I'll dip my toe in maybe some Enphase or solar. There's other solar that might be positioned just a little bit better too. But.
Mm-hmm. Okay, back to PayPal. Thoughts on active accounts staying flat?
It was up 1%, so it wasn't flat. That's about what they grow. It's a little bit less growth than I expected. I think 2% is what they did the previous quarter. It's a law of large numbers thing. When you're talking about over 400 million members, it's hard to grow immensely. Now they did grow a lot of products. Like they had added 5 million debit cards in Germany, but those were already users of PayPal, so those don't count as active accounts. You still see like it's very good for the ecosystem. Venmo, there's some good things from that in the partnership that they had on campus. But yeah, so not really a concern. Not I would have preferred to see it hit 3% or 2.5%. Really, I think is what I projected. But yeah, we'll see with quarter 4. I think so. They actually talked about acquiring more users in the earnings call itself, related to buy now, pay later, and some of the promotions that they also are doing, which will mean that there's contra revenue. It's one of the reasons why guidance was not quite as good. Contra revenue is basically when you attach some sort of promotion to gain volume. In return to that's contra. So for instance, like matching benefits, that what Robinhood does or what Sofi does, that's considered contra revenue. It's a flat out negative towards the revenue. But the reason why they're doing it is not because they like to give away money or lose money or anything. They're just seeing an opportunity with some of their product lines that they're like, hey, we can scale this, and it's not going to, they're not like losing money on this, but they're basically willing to take a much lower rate temporarily from people, like offering them some promotions for trying out things like, for instance, the biggest one is buy now, pay later this quarter. They said buy now, pay later. If you use buy now, pay later and you're there for PayPal rewards, you get 5% cash back. PayPal's take rate on buy now, pay later for merchants for the pay in 4, 5%. So they're in essence saying, we're fine for a quarter during holiday spend. Use our product. We want to scale buy now, pay later. They position everything there. So yeah, I think that really quarter 4 is what you want to look at. Now, if it's at like literally flat 0% in quarter 4, there's something that's gone wrong. You're not going to see like 5% or anything, but 2.5%, I think is what we'll see next quarter. I'm being too long. I'll be shorter.
Why did they announce an OpenAI partnership the same day as earnings?
I think that was more on OpenAI, but yeah.
Yep.
It doesn't really matter like when they announce things. The market reacts the way it does to PayPal anyway.
Is the partnership today exclusive, a time frame, or just one partnership with more to come? Any idea?
OpenAI is a type of company like Shopify that partners with everybody. So it's not an exclusive. There will not be an exclusive as it relates to really any of these platforms. That doesn't mean it's not a deep partnership. PayPal has a incredibly deep partnership with Perplexity, which I think that they're the deepest out of anybody. They have a deep end relationship with Google. They announced a deepening of that yesterday. The main announcement was actually back in September 17th, I think. OpenAI is fairly deep as well. Probably not the deepest out of all those. This is not going to be a winner take most, but yeah, it's a very good partnership.
New drinking game. Everybody take a shot every time Roy says deep. You said it 6 times.
That's deep, man.
We'd all be plastered, everybody. We'd all be drunk AF, which could make for a fun stream, I guess. Did I close out my Sofi $27 puts? Yes, I sold them. I bought to close one day before the earnings at 73% profit. I posted on X about it. I would have had like 95% profit had I held them, but it's just like, I don't know. So if I could have gone to 27 today, and so I don't really regret anything. Are you small bid cap type of investor? Yes, we generally like smaller market cap companies.
Yep.
Yeah, it sounds like a fantastic New Year's Eve live stream. Okay, I'm just going through these chronologically. Thank you, Quan Tesla, for the 5 memberships. I just want to answer this real quick. This is going to be something that's coming soon. Going to be announcing this. Roy already knows what it is. Lots of great development work has gone in the background. We're going to be ready to launch something probably towards the end of calendar year. We are going to have like a beta period where people can sign up and play around and give us feedback on what we can improve before formally launching it out. I'm really excited about it. I'm going to make a longer post on X and probably do some product demos for you guys. It is going to be a product that's related to investing, and it's related to option selling specifically. So stay tuned for more. We should have more details coming in the next 1 to 2 weeks, and very excited about it. It's actually a tool that I'm starting to use like on a daily basis. Like it's gotten to that point where it's actually good enough, for me to use personally, which is like, I'm a product guy, right? Career product guy. So yeah, I'm a bad hype man, but it's going to be nice.
And I'm interested too. So it's a good product.
It got Roy's stamp of approval. So yeah, more to come in the next couple of weeks. I'm going to name drop what it is. There's going to be, the marketing site is up now, but I don't want to really just announce the name right now and blindside my team. But there's going to be like a wait list and everything. And so stay tuned over the next couple of weeks for that. And it's going to be very, very fun. And I think it's going to be a product that all options traders are going to find useful. So more to come. Just a minute. What do you think of HIMS today? This is going to be an interesting topic, actually. I see a lot of bearish sentiment. Do you still believe in the company? Do you want to go first, or would you like me to go first?
I'll just be quick. I've been pretty frank on HIMS. I have decreased the size of my position very intentionally because of the run up, and also because I've seen some slowdown. It's more of a next year growth story for me. So I still believe in the company. I still believe in the long-term vision. We'll see how earnings do. If we see more slowdown in the core and some unexplained kind of sketchy stuff, which we've seen a little bit of, I may get out. But I'll let you guys know if that's the case. Where I'm at right now, if earnings are what I expect they will be, basically what the market's expecting, yeah, I'll keep holding, and I think next year is going to be very good.
Yeah, what I will say is similar to Roy. I mean, it moved from a strong buy to a hold for me. I want to reduce my position sizing from a risk perspective because it's just way too much risk for me to carry for something that I'm less confident in. I think the CEO's actions are definitely not helping matters, but they're not in isolation a reason for me to completely sell out of the position because I want to look at the fundamentals. I think it's going to be very difficult for them to achieve or stay on track with their guidance for the end of the year. And it's really going to be a matter of what they say to assuage retail and institutional interests and concerns on the earnings call. They report earnings next week, and there's a couple of open-ended questions around demand, around the rollout of new products, around GLP-1s as a percentage of total revenue, and overall around whether they can or cannot hit their growth metrics. If management reports good numbers and they beat and they actually report good guidance, then absolutely glad to be a shareholder. If they don't, this thing is going to go back down and probably under 40, quite frankly, because the implied volatility is massive on earnings. And if it does go under 40, I don't want this to be my second largest position. So I cut my leaps. I cut some of my shares. I'm going to be cutting some more of my shares, probably around, I would say like 1/3 to half of my position, all in all, before earnings. And if they pump to 70, then that's great. If they dump to 30, then I feel better. It's just like I feel good either way. Similar to the Sofi covered or cash secured puts that I just answered a second ago. Like I would have been 95% profit, but I know what the results are now. I didn't know them when I cut. So anyways, that's my thoughts on HIMS. What percent of holdings is Sofi, if that's not too personal? Sofi is 25% of my total portfolio.
For me, it was 13.9. It's probably more like 15%, 16% right now.
Yeah, that's a big percentage for the both of us.
Yep. Second largest for me. So
let me see. There was a couple questions about the startup. There's a team of 6 of us right now. I didn't code anything, so you guys can rest assured that my hands were nowhere near the code base. I was just doing the product stuff. Thank you, Brock, for the $10. Had a dream that you made your channel 25% member-owned via tokenization. Yes, you too one day could own a piece of this brand. So as appealing as that might sound. Who thinks Sofi is going to hit $40 by Thanksgiving? When is American Thanksgiving, Roy?
Not December, November 25th, 26th, 27th. It's always a Thursday, so the day itself moves around. But end of November, it could.
Yeah, I think it's going to be a tall order for $40. It could. I think 35. Like when my family asks, and I'll give you guys the same answer, $35 by end of year is the price target that I give them for SoFi. And my aunt just asked me today, what can it get to? 35 end of year. If you don't like it, sell out. But I'm not going to give you like a $45 end of year price target because it's aggressive, right? This thing has already run like triple this year. When are we doing a sushi mukbang? We're over $30 now. We need to see it.
Ooh.
Yeah. If there's enough interest, then yeah. Roy, would you be down for that?
So I don't know what mukbanging is, but sushi I'm down for.
It's when you eat an obscene amount of food on street. Well, maybe somebody in the audience can explain. My understanding is that when you destroyed an entire amount of food, so just eating in copious amounts. I don't know.
Yeah.
I'm too old for these guys, man. Gen Zs. What do you guys think of the Technisys
platform? Yeah. AWS FinTech is kind of busted for me, but I mean, that doesn't mean Technisys isn't going to grow and the tech platform won't. I think that the partnerships like what they have with Southwest Airlines kind of show the way. I don't know that banks will. Maybe we'll see some old dinosaur banks finally on board. That pipeline or that timeline has been so long. I don't know that ever happens, and it doesn't make as much sense to really give your business to a direct competitor. But there are plenty of other companies out there that need access to products that SoFi has and offers through their tech platform. So they'll be fine. It's just not a core part of my thesis, especially over the short term. I'm expecting nothing out of it probably for the next, honestly, 3 or 4 quarters. I do think we'll see some acceleration next year, but in quarter one, there will be for sure a pop on revenue, but it's a one-time pop. So.
Yes, I agree entirely with what Roy said. I think it's underwhelming right now, but we're giving it the benefit of the doubt because they as a company have earned it at least until 2026 when they said it's going to ramp back up. If it doesn't, then it's a different story. But right now, I mean, they told us Q1 26, so I'm looking for Q1 26. Roy, a mukbang is a food review, including some binge eating. So basically, we're both going to order like 40 rolls of sushi and just eat it all on stream.
Charles said Bing eating. So anything with Microsoft, I don't eat personally. I'm allergic to Microsoft.
I wouldn't put that
in Linux. So I'm messing with you guys. Sorry, I couldn't resist.
Yeah, I don't know what would compel Roy to eat 40 to 50 sushi rolls with me on stream with 400 people. Probably some amount of light convincing. I don't know, but I would love to do that with you. I think it'd be a bonding experience. Okay, let me actually go back up to the other questions. What was the PayPal? Okay, Michael Anthony, restart to the very, very beginning of the stream because that's when we're talking about PayPal. And Roy has timestamps that you're going to see at the end of this video if you're watching the recording after the fact.
Yeah, 41% of the market cap, something like that, of the market cap of the S&P 500 report this week. So there's a lot of earnings going on.
Capital Exotic says, if we hit $100, I'm taking you and Tanner to Harbor 60. Dude, you said that with like $30 or $40. I remember this because you're still maintaining the same ratio, man. It was like $6 or $7. And you're like, guys, when we hit 30, I'm taking you out like balling. And now you're saying it for 100. So I'm going to start trusting you less, sir. I think we've earned at least like a Wendy's Baconator or something at $30, and we can save the fancy restaurants for 100. Charlie asks, do y'all think the market will have a hard time moving upwards when the job loss becomes extreme?
No. Well, that's a win, and that's an assumption I don't share. So if you want context, go back to January and February 2023. That's when job losses were ramping and looked pretty scary, but they really weren't. And we know how that turned out. I think that this is very similar, although not at the beginning of the year where more companies will do that. it's too early for, unless you're talking about like maybe 5 years out, 5 to 10 years, then yes, at that point, absolutely, you're right.
Yeah, I am a little bit more skeptical, but we'll see. I think it's going to be several quarters away. I don't know when the market is going to price it in, though. So, okay. Q&A, what companies do you hold long-term? We both publish our holdings on our X channels. Mine is my pinned post, and it has been for the last 4 to 5 years. And Roy's is right here.
Yep. And it's by sizing. So you can see Robinhood's the largest, Tesla's the smallest.
Mm-hmm. Okay, let's take a look here. Sofi, when do you expect S&P 500 inclusion, Roy? This is going to be a fun one. December or March? Or later?
Later.
Okay.
Maybe June. I think the second or the third quarter is about right. They're putting up tremendous earnings. There is a lot of fintech, but that didn't stop Robinhood from getting in. There's a lot of really good companies that are on the outside looking in, and the S&P 500 seems to be slow in identifying some of the good companies and loath to actually kick out moribund companies. So,
yeah, I think March. So we'll go with that. Why aren't you guys invested in AI utility plus cloud companies? I think Tevis is the only one who got into Nebius recently. Nebius.
yeah.
Roy, why aren't you in Nebius?
I was in Nebius for a while. So I'm in, as far as like going back to this real quick, not specifically cloud companies, but Nvidia is all over AI. Palantir is all over AI, and Airtest Systems is also all over AI. So a good chunk of my portfolio is positioned that way. I probably have way too much fintech and exposure, especially to crypto. But yeah, cloud, I mean, it's good. It's solid. I obviously should not have sold Nebius when I did. Nice gain. But I just prefer to have more exposure into Nvidia because there's a lot of beta in my portfolio. And so that's my anchor stock.
Mm-hmm. Yeah. I mean, Nebius is now my second largest position, by the way. I don't know if that's breaking news to you or not, but yeah, it's like 7% of my portfolio now. Did I miss you talking about UNH or didn't you? UNH double beat on earnings. They reported this morning. I still have my spreads open, but not for long. My spreads are about 60% profit. They're 420, 460 spreads for 2027, which I bought back when UNH was like in the 250s, 260s range. So I'm going to let go of those soon and then use that money for something else. But yeah, that's basically it. Roy doesn't have a position, and I don't think he really cares that much.
No.
Can somebody help me? What to do with my Nvidia? Sold a put at 195, expires this Friday. Do you want to take that or you want me?
If you sold a put, then that means you're going to not get shares and you'll just get some money. So great.
Congrats. But maybe means bought a put or sold a call. I don't know. We'll see. If you're still in the chat, Sauceman, please clarify. But we'll move on for now. What do you guys think of Oscar, if anything? I'm thinking of investing and investigating starting soon.
I would get out before Trump's out of office. I think there'll be some vindictive hits on them. We'll have to see what happens with ACA, but I don't know that the subsidies are coming back necessarily. It seems like there's a lot of positioning against that. If so, like if you're doing it as a short-term trade betting on that, it may be worth a trade, absolutely. I think it's a good but not great company. And that's okay to invest in. I have higher conviction in another place.
Okay. Tevis, don't you hold VG and Next? I hold Next. I want to get into VG. I think Matt made a compelling case for when VG got cut in half, that it's more like it's a safer play because they're further along in that journey from a revenue perspective than Next. Next is a higher potential, but yeah, it's very interesting. And I think it's going to become more of a topic of discussion as we get closer to 2026, because I think energy, LNG in general is going to be a bigger focus area in the market, let's say. I don't know, Roy, would you agree with that or disagree?
I agree. Yeah.
Okay, Roy and Tevis, what do you think of HIMS today? I mean, yeah, we just answered this, so just rewind a little bit, Pedro. Basically, we're both skeptical, cautiously optimistic, let's say. Do you think Fiserv will report good earnings like PayPal? This is for you, Roy.
I don't know the company like really, really well. I know it a little bit. I think that probably yes. Payments is not a place that the market's loving right now, so don't expect too much in terms of stock movement. And I don't like the way they're funding their buybacks. That's not a dead company. It's not even a disrupted company, but yeah. I wouldn't want to own both Fiserv and PayPal. I know some people are in one or the other. Both, I would just, I don't know. You can, you do you, but
yeah, I know nothing about Fiserv. I'm sorry. Follow Tanner for Fiserv because I think he covers it more than us both. Michael Anthony, I know you had to step out. I just said if you want PayPal stuff, we covered it at the very beginning of this show, so definitely check that out. Okay, so let's see what's next. Are you going to buy more PayPal or is it just a hold now? This is a good question, I think.
I've added a little bit last week or in the week before too, but it's large enough holding that I'm not going to add meaningfully. I'll add here and there.
And I'm going to be looking to maybe start a position over the next 3 months or so. TBD. I'll let you guys know when I do or if I do. Great question, June. Thank you so much for asking it. I really appreciate this question. Very thoughtful. Have you guys started thinking about this year's picks for the Christmas stock exchange?
A little bit.
Really?
Yeah.
Really? That's it's not even November 1st, bro. You're already breaking out the Christmas music.
No, just giving thought to some that haven't been on the radar. And if we make the rules, you have to own. One of them that I'm thinking about, I don't own yet.
Okay, that's interesting. I have not thought about it for personally, June, but I guess I'm a shittier friend than Roy is, which we all knew ahead of time. No, it's not a big surprise. PayPal over BMNR, just no.
Yeah, I mean, yeah, no. BMNR, I think short term is going to be better. Longer term, I want PayPal.
Ooh, what a question. Underdog picks that no one is thinking about. I think Steve had one of these that he teased. I think he actually announced what it was. There's nothing that comes to mind other than Lemonade because people are still sleeping on Lemonade. And Next, I guess. But it's it.
No one is not many. So like Air Test Systems would probably be my only one that's really under the radar. Positioned well, basically no matter who wins. And as AI and chipsets get more and more complex and need to be more and more reliable, and they're a higher price point, the need for the type of testing that Air offers, which is far more robust and also less expensive, if you look at it in aggregate, especially in energy, is incredibly valuable. They're a picks and shovels play. They're interesting. Market's been kind of treating them flat to down. And I'm like, man, if it goes under $20 again, I'll definitely add some. I'd be very glad. I might even double my position at that point.
Yeah. I like this rule, Capital. For the Christmas exchange, the rules are you have to own. This is a rule that should apply only to Tanner because he's only the one with Joby picks. Lemonade, why so? Insurance? Yes. The AI component is really the value proposition there. So I'd suggest you take a deeper dive there. I've done videos on it. Paper Bag Invest is like the OG Lemonade retail investor. Roy, anything to add?
I don't know much about Lemonade. We talked about it a couple episodes ago, the Tesla thing. Not an exclusive partnership or anything. It's just leveraging Tesla's data, but it's an industry that needs to be disrupted. I don't know enough about them to know whether or not they are, but early read is maybe.
Tevis, I was outside. Yeah, look, Steve, that sounds good. It sounds good to me. Honestly, man, like aside from fancy restaurants, I would love to get together with viewers and just do in-person meetups similar to how Amit did it. I think if people are already living in Toronto, like we can get myself and Tanner, and we can just do something. So we can organize something like that as well. That could be really fun. But yeah, of course, I think there should be, with a community like this, there should always be reasons for us to celebrate as a community when certain milestones are hit. Because I mean, look, we've been talking about this Sofi thing for the last 4 years, 5 years, right? So we should all do good things, and I like you bring up the suggestion. I appreciate it. Thoughts on DraftKings? I mean, I've shared my thoughts on it. I think prediction market is going to eat their lunch. It's just a superior product offering, right?
Yeah, I agree.
Getting back into M phase after today, Roy?
Maybe in a year and a half.
A year and a half. Okay.
I mean, like the price, I would have to look at the earnings. I think the earnings went today, or was it yesterday? I know it was this week. I've not had the time. Like today, Tuesday's my busiest day. And when you have multiple earnings that I need to go through, plus like a whole bunch of meetings, like, and then this, which I love. I would need to dig through. Maybe there's something in there that like, hey, I need to get in. They're not a dead company. It's just very cyclical. They'll survive yet another cycle. They'll come out the other side. But I think that they may be dead money for a year and a half.
Okay. Yeah, that's a good answer. Probably not, if I'm being honest with you, Chris. I would love to. And if I was a full-time YouTuber, absolutely. But like, dude, I've been 2 live streams before and after work, meetings all day. And right after this, I'm probably going to record a BM&R video and then edit the video and then go to the gym and then go to sleep. And like, that's my day, So it's really difficult. And same with Roy, right? Like, it's really difficult when we have actual jobs because these earnings are at 4 p.m. and it's tough. So probably not. Okay, so Sauceman clarified. Should I roll my 195 put to an even higher strike price, like 200 by next Friday? Roy, thoughts there?
I mean, if it's a put that you sold, a cash trigger put, no. I would let it expire and just re-up if you want to re-up. There's no reason to get creative.
Coincidentally, completely unrelated probably, Sauceman also asks, is Nvidia expensive now? Roy?
I don't think so. It's not cheap, but no, it's one of the greatest companies on the planet ever.
Yeah, I mean, if they're going to do 500 billion in 5 quarters, then like, nah, they're not really all that expensive if they can keep up that growth, right?
Mm-hmm.
Hello, Jay. 25% cash. What should I buy? Advise.
We don't do that. Sorry.
I advise you to donate that 25% cash to Roy and I. You see the inherent issue in me offering financial advice? This is not financial advice. So I'm sorry. I cannot. I mean, I'm sure some people in the chat will offer you some stuff, but I can't because I don't want to get sued. Rock O'Clock. Love that name. Are you guys in ASTS? No.
Mm-mm.
Okay. Any expectations regarding HIM's earnings? Up, down, sideways? Definitely not sideways.
I mean, it's all about the core, I think. So I think probably down.
Yeah, I think down as well. I think sentiment would predominantly say that it's going to be down. Like if I were to put out a poll right now, majority of people would be saying it's down, mostly because HIMS has just been consolidating for the past couple of months while the wider market has been rallying, which further feeds into this perception that like, it's a bad pick. Like the recency bias in the market, myself included, by the way, is massive and it's so pervasive and it's just such a like a mind, fuck.
Yeah, the comps are so hard too. So
it is hard comps, yeah, and they have aggressive growth targets too to even reach their full year guidance. I don't know if we had to answer this.
No, I'm not sure that yet.
Okay, I work in tech. I work in product management, and How do you guys position when owning a stock and option? Like 50% stock, 50% option?
That's probably way too much option for most positions. I usually only buy options like leaps or vertical spreads. Well, only leaps on plays that I see very, very undervalued relative to where I expected they would run. So I'm really conservative with those. And I'll do enough to, based on where I think that they might go, how much I'd like to make from that, and be very happy continuing to hold the stock indefinitely. Most of my position is just 100% stock, other than options that I sell against that. Robinhood, the exception there is I had some vertical spreads for a while, just 100% stock. PayPal is a combination of options, which are leaps, and stock. All stock and Palantir used to be leaps. I sold those. Airtest Systems all stock, even though I think it's undervalued. It has enough beta there. Same with Bitmine. I don't need much in the terms of options. I do have a little bit on Bitmine, but yeah.
I think for me, you can always tell my conviction levels. Whenever you see my portfolio updates on a monthly basis, you can always tell my conviction levels on stuff that I've bought leaps on. Because generally speaking, I'll buy the majority of my position in shares, but I'll also buy leaps when I think that there's an outsized opportunity. I did a lot of Sofi leaps. I did a lot of HIMS leaps, which I sold. I have Nebius leaps and BMNR leaps as well that I have open, because I think there's opportunities there. And it's always, always, always super small percent relative to my stock holdings. So like it's always single digit percentages of the actual underlying position. So it's a risk adjustment thing. I don't want to take on too many risks and blow up the portfolio. BMNR confirmed earnings report tomorrow. I think so, but I don't think it's really going to matter at all because they're a treasury company. It's a little bit different.
Yeah.
Did Nvidia hit 5 trillion today? Yes. Yes. Yes.
I think so. It's really close, if not.
Yeah. Thoughts on Ethereum ETFs, especially considering how these will at some point be allowed to collateralize loans yet still make gains and be staked? Bullish.
Yeah, and you're already seeing it with Figure.
Broadcast, there's a Palantir logo on your forehead when you make a certain face SFY. Thank you for that, Brock. Now I can't unsee that for the rest of my life. So I think it's like that. I don't know. I'll make it eventually and people will tell me. It's just, yeah, these wrinkles in my Eastern European forehead. Okay, I'm tired and I got to film a BMNR video right after this. So I love you guys very much. Do you think MicroStrategy is finished? It's not finished if Bitcoin's not finished, and I don't think Bitcoin's finished. Yep. Not financial advice, it just popped up. Thanks everybody so much for watching. Really do appreciate you. And this has been the Bootleg Weekly. We are going to be back next Tuesday at 6 p.m. Follow us on Saturday for the FinTech Friday show. It's going to be a really fun show. Really fun show. And thank you for allowing me to share a little bit of an announcement about the startup. Really excited to show you guys more details in the coming weeks and announce it more formally. And congratulations to SoFi shareholders and even PayPal shareholders. 3% is not a day that you guys see every day. And we'll see you next week. Consider becoming members. I don't know what else to say. Okay, bye now. I'm closing the stream.
Appreciate you guys. You're awesome.